Are you coming in? You coming in? You coming in? Hello, hello, hello. Hello, hello, hello. Is it working now? Is it working? 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 Hello, hello, internet. This is Matt from the Matt Kohrs Show. Can you now hear me? Testing, testing, testing. 1, 2, 3. Testing, testing. 1, 2, 3. I've been streaming. The video's up. Somehow I ended up on Twitter, but it did not end up on Rumble or YouTube. Now I have an errant stream on YouTube that is confusing for many, many reasons. I guess I need to delete that one forever. Yes, I understand. I must have messed up my stream keys somehow, but I think I'm live at this point on the right one. Are you guys hearing me? Are you guys vibing with me? You could actually see the start of the show. It was up on Twitter, and it was on a different YouTube stream. I think it might have even been on a different Rumble stream. Are we going right now? Can you guys hear me in the proper channel on the... Where are we at? Where are we? Okay, we're here now. I am live. Well, what you've really missed is the fact that Piper has decided to hang out for the day. She's just vibing. She's just chilling. She was being a very, very bad girl last night. Just up all night, ripping feet apart. Just all of a sudden, you just hear the smashing, the clattering of our various plants outside on the sill. Here's the growth check. She's now 1 full length of a camera, so she's getting pretty big. She's getting pretty wily. She's just vibing, dude. She's just vibing today. Look at that. I don't think she really gets the concept of cameras yet. You gotta look right here, over here, right over here. Look right here. Nah, she doesn't care. She's just vibing. Well, we are about to get the retail sales report at 8:30, so we're gonna switch over to that. But I do want to forewarn you, if she doesn't really get the concept of how she shouldn't climb up people's legs, especially when there aren't pants on, she'll just claw right into your thigh to climb up to get on top of your shoulder. So if I end up screaming like a little girl throughout today's show, understand that I am in fact not a little girl, and it just happens to be that I'm being attacked by my roommate. So that's where we're at. But let's switch this up to the retail sales, and then I have to redo the whole intro of the show. Just so you know, Central ECB, the European Central Bank, hikes rates to record level as inflation risks outweigh economic gloom. So it was actually a surprise hike. They pretty much thought they would keep rates over at, they're the equivalent of our central bank. They thought they would keep them flat, and they actually raised it by 25 bips.
We got consumer prices
we're getting
right
retail
now.
sales right now and PPI.
Data. Rick Santelli joins us for that. Rick, take it away.
Rick.
Yes.
Rick.
The August read for producer prices, the wholesale version, of course. Headline number expected to be up 0.4 is up significantly more. Up 0.7, up 0.7 of 1%. That's the hottest read going back to June of 22, when it was up 0.9%. And if you strip out, excuse me, I was looking partially at retail sales. Now, if you strip out food and energy, that was retail sales up 0.6 of 1%. X-autos up 0.6. X-autos and gas up 0.2. The control group up 0.1, and that's much stronger than expected. Now, that 0.7 on PPI headline I just referenced, well, if you strip out food and energy, it drops to 0.2, exactly as expected. And if you strip out food, energy, and trade, it's up 0.3, and that's a little bit on the hot side.
Look at Rick,
last
just
time we were up
crushing
0.3
it this
here was
morning.
February last year. Last time we were up more than that was up 0.5% in January of this year. So we can see that those numbers have moved a little bit. And if we look at final demand year over year, and these are important, up 1.6, up 1.6. It was supposed to be up closer on expectations to up 1.3. And in the rearview mirror, that was up 0.8. That was up 0.8. So up 1.6 is actually the hottest read since April, when we were up 2.2. And if you strip out food and energy year over year, it is up 2.2%, exactly as expected. That's 210 shy of the 2.4 in the rearview mirror. And if you look at PPI X food, energy, and trade year over year, up 3%. That's a bit hotter than expected by 3
Little
tenths,
bit
both on expectations
hotter.
and the rearview mirror. The last time we had
So
a number in
yesterday,
this
CPI a
category
bit hot,
was
and now
April of this year, when it was
PPI
up
a bit hot.
3.3. Now, let's move to initial jobless claims. And by the way, you notice the
225, I think,
we
is the
had,
number.
we dropped significantly on yields. Now we've turned it back around. So it was a bit hotter PPI, and also some of the influences earlier.
Knee-jerk
of the
reaction
ECB
is this will
10 consecutive
essentially
rate
confirm that we're
increase.
getting
Jobless
one more
claims,
rate hike in November.
220,000. That's
my
5,000
knee-jerk
less than
reaction to this
expectations.
report.
That's
Not
4,000 more
a
than the
rate hike
rearview
in
mirror,
September, but one
we
in
could
November.
Still see a revision. 216,000 on our last look was actually the lightest number going back all the way to December of last year. So now let's look at continuing claims, always a week in arrears. So there could be some influence there with the holiday issues. 1.688 million, so 1,688,000. That's almost spot on with expectations and just a smidge higher than our last look. I continue to point out that we've gone from 422 and 10s back up very near 427. The high yield trade moments ago around 428 and 10s. So we want to pay particularly close attention to two things. We've talked before that when we extended this rally in yields or sell-off on the face value, it took out some of the October high yields in the long maturities. Those yields in 10s happen to have been 4.25. And I said at that time it was technically significant. We're going to have yields more biased to the upside and very sticky around 4.25, and we see that continues to be true. Becky, back to you.
Rick, thank you very much. All right, Steve Leisman joins us with more on this right now. Steve, I guess the most important number, probably headline for the PPI, a lot hotter than expected. If you strip out food and energy, it's not hotter than expected. It's right in line with expectations. Is it easy enough to pin that to higher energy prices, higher oil prices, or is there something else at play?
No, that's what's at play. It's actually, Becky, at play in the retail sales number, too, because that hotter than expected retail sales number was also driven by a 5.2 percentage point month-on-month increase in gasoline station sales as well. And there was some weakness underneath that. I am, of course, amazed that we continued that August strong consumer spending, albeit a lot of it for gas. But I was expecting this to come down quite a bit. It didn't. There was a downward revision to July by a couple tenths, but the idea that we've maintained it maintains this notion that the third quarter GDP number is going to be fairly strong. It is interesting, though, that the trade services number, I don't know if you remember that last month, there was a funky number in there that pushed it up, which was commissions in the financial sector. That fell. The total trade number or the profit margin fell 0.3% this month. That's going to feed into the PCE, so this might be good news for the Fed's alternate indicator there on the PCE. But still, we're going to have to digest somehow, some way, this surge in oil prices into both the economy and into our thinking about monetary policy. And it's a tricky thing to game out, because if it was just oil prices and or just food prices, the Fed could look through it. But what we don't know is whether or not that bleeds into other areas of the economy and starts having an effect, for example, on service inflation. And also, does it have an effect on inflation expectations? We have to watch it. Before we go, I just want to give you the latest quote here on the Fed funds.
Whoa, what's going on with CNBC? That one's not Piper's fault, just to clarify. Well, PPI coming in a bit hot. I don't know why it's freaking out there. August wholesale inflation rises 0.7% hotter than expected. Retail sales up, PPI up. The retail sales 0.5 percentage higher than expectation.
South Carolina Senator and presidential candidate Tim Scott. He's going to join us next.
Do you want to listen to Tim Scott, or do you want to go over other stuff? Dude, this cat is being so fucking bad today. Stop. Dude, she's a little gremlin right now. What'd you do? You broke it. You broke the stream for everyone. Are you happy? Is that what you wanted to see? Did you want to financially ruin me? Dude, she is just crazy cat mode right now. All right, here, let's switch this up. They're going to think I'm just a insane person. I'll see if I can switch this up where we can appropriately. All right. We're going to do a little bit of this, a little bit of this, a little bit of that. You happy now? You've disrupted the entire stream. The entire stream, Piper. I hope you're happy. I hope you proved your point to everyone. All right, we'll see if she comes back up and less of a dangerous height off the floor. You know, you always think of cats as like agile creatures. Piper, particularly not agile. Come here. What are you doing? We're either doing the show today together or you need to leave. But you just hanging out, ripping my feet apart is not part of the show. It's not part of the show. We've talked about this. Oh, man, it's like, you know, it's so hard to find good talent these days. Talent that just like won't bite your feet in the middle of the show. Dude, she's losing her. Just chill. All right, I don't know. There's no winning with her today. Literally no winning with her today. I'm embarrassed for her to you guys. Dude, stop. Breathe. Just breathe. This honestly reminds me about what I was talking about on the other stream that mistakenly went live. And before we get into it, because we have a lot to talk about, I'm going to be reviewing the wholesale numbers, retail sales, initial jobless claims. We have Ken Griffin doing an interview at 10 a.m. this morning. AMC completed the most recent round of dilution. We have some craziness going on in the world of Tesla and Elon. We have a bit of a political update. We have a lot to get into. But before we get into all that, I want to share a little bit of, I guess, an update here. A little bit of an update. And particularly what I'm talking about is more of like a life lesson. Yes, you may be able to apply it to trading, but I'm here to, I don't know, be a little bit more of a philosopher, if you will. So obviously some people play this life on easy street, on easy mode, novice mode, like they're living on easy street, whatever you want to call it. And other people, it seems like no matter what they do, it's always just a streak of bad luck, bad luck, bad luck. Now, in my life, I've been fortunate to have runs of good luck, and I've also unfortunately had to battle through periods of bad luck. And last night, I think I had one of the worst, I guess, like situations that anyone would have to deal with. And I honestly wouldn't wish it on my greatest enemy. So I decided after a crazy day of signing this, filming that, doing everything in between, I decided to, go to the old grocery store, get a London broil, and plan on reverse searing it. If you haven't done this already, do it. All you need to do is get a nice hunk of meat. You throw it into the oven for 325 for 25 minutes. And this is if you want it medium rare. If you're trying to cook steak at a different temperature, you might as well leave the stream because I don't want to hear from you. But anyway, you cook it for 25 minutes in 325. When you're done with that, you heat up a skillet really hot and you just kind of like highest temperature possible for a minute or two on each side just to seal it all in. Bada bing, bada boom. You just reverse seared a steak and it's awesome. So this was my whole plan. I was like, I'm going to absolutely crush it. I was looking for a record-breaking event. I was attempting to cook the best steak I've ever cooked in my life. Just really get to the top of this mountain that was the Wednesday of my life. So anyway, I go in there and I have a game plan. And I walk in and I'm like, you know what you need with the steak? Obviously, you need some sort of vegetable. And obviously, broccoli is a very reasonable go-to, especially if you're already going to be cooking something in the oven. You get some just salt, pepper, all that good stuff. This isn't a cooking class, and maybe it should be, but we all know how to cook up some good broccoli. So anyway, I'm walking around, and in this particular grocery store, there's two options for broccoli. One that feeds 2 people, and then the other one that I think like feeds upwards of 200. There's no in between. There's either the biggest bag of broccoli ever created or a reasonable amount of broccoli. One to feed a militia, one to feed a small family. Those are the two options. So I'm walking around. I find the broccoli location. I'm treating this as if I'm like SEAL Team 69. I have my map out, I have my reconnaissance. I know I'm about a click away, and I finally get to like location Tango, and the broccoli's there. And I see all this broccoli. Unfortunately, it's the oversized bags of broccoli, just way too big. And I'm like, what am I going to do with this? Not only do I have to buy this bag of broccoli, but now I have to get like at least 1,000 friends to come to my apartment and eat this broccoli with me. It's just completely unreasonable. I don't want to buy it because I just know I'm going to end up throwing so much of it out. It's just an unreasonable amount of broccoli, a plethora of broccoli, if you will. And at this point, I'm at a low because I've had such a day. I had such a vision for this London broil. And all of a sudden, whether you're a religious person, karma, or maybe you just believe in statistical chance that sometimes you'll just have the worst day possible, I could not find the appropriate bag of broccoli. As I alluded to, I know this is a harsh story. I understand. That's why I said I wouldn't wish this upon my greatest enemy. And when I was in the lows, like I was truly spiraling into a dark abyss of what am I going to do? My dinner plans completely thrown out the window. Like just, it was all going against me. Like, I don't know if you guys have ever felt like this, but just when everything in life is just beating you down. And then this was it for me. I could not find the appropriate bag of broccoli. And I mean, spiraling is the word that comes to mind, but I don't think it really fully encaptures the magnitude of what I was going through, like mentally, physically, spiritually, metaphysically, whatever you want to call it. And when all hope was lost, I, like a lost toddler within a grocery store, it was nomadic. I was just walking around trying to figure out what I'm going to do. Distraught is majorly the emotion and the, I guess, circumstance I was personally battling with. And all of a sudden, I found a pineapple section. I don't know if you guys have a pineapple section, but in my grocery store, there's a pineapple section, which is just like a small little tray of pineapples. But anyway, I'm at the pineapple section, and I bang a left turn. And right as I hit a left, the first thing that attracts my eyes are these red tomatoes. And a little bit left of the red tomatoes, I see not one, but two appropriate size bags of broccoli. Folks, not just one, but two. And right there, as life itself, God herself, karma itself, was just shining upon me. I swear, I think I almost heard a small choir in the background as the light descended from the grocery ceiling right there. There was a spotlight. And when I came around that pineapple left, and I mean, obviously I was burning out. I'm a fast walker. So I burn out, see the tomatoes, eyes look a little leftward. It was just like, oh. And right there, I knew it was going to be a good night. It was at that moment that I realized no matter what we're thrown in life, you might have to experience such serious, horrific events the way I have. But if I can make it through that, you can make it through whatever life throws at you. Yeah, in the middle of it, I'm not going to say that it was fun to go through. But now that I know I've gotten to the other side of it, obviously, it's nice to know you can survive that type of an event. So whatever goes on in your day, your week, your month, your year, understand, first of all, that it could always be way worse. You yourself could be a lost toddler looking for broccoli in a grocery store. But maybe your story isn't going to be that bad, because I obviously understand the magnitude of it is extreme. And once again, I don't hope anyone gets through it. But whatever you're going through it, just basically keep banging lefts whenever you see a pineapple. And eventually you just have to trust in the fact that it's going to work out. So whatever it is in your life, whether it's trading, outside of that, maybe your job, your relationships, just understand there's two major rules. If you see a stand of pineapples, take a left, because maybe your solution's going to be right there. And number two, you just got to keep going. You just got to keep going. Yeah, my nose is, because this freaking cat, and I didn't take my antihistamine this morning. I should get sponsored by Zyrtec. Did you just say well done steak and ketchup? That's crazy. Don't do that. Don't do that. But yes, I'm honestly, a bigger issue at the grocery store was the fact that they didn't have allergy pills. So my antihistamine levels were just raw dogging it today. I don't know if my histamine levels are high or low. I'm not a scientist. I don't know what it means, but we're going into the histamine levels raw today. Raw. And we're going to see how it plays out. A lot of people have told me I should get Flonase, but honestly, I just need to take a Zyrtec and then I'm going to be 100% fine. Such an emotional story. Yeah, here I am blaming it on allergies when we all know I'm just like obviously still super upset from the broccoli incident. I mean, it was an emotional roller coaster to say the least. So like here I am, a grown man, but because of society, I can't confront my emotions the way I need to. Here I am trying to blame a 4-month-old cat who does nothing but bring joy into my life, when in reality, I'm just pushing off blame. And it's probably because I didn't get enough attention as a child. And I think the story symbolically represents myself. In all reality, who internally doesn't feel like a lost toddler looking for broccoli in a grocery store. So I think that's what's going on. I think if I were to do a psychoanalysis of myself, I think the event was triggering and it represents life as a whole. So that's probably what it's about. Andre, hey, can we talk about stocks? You wouldn't get it, Andre. Not all of us grew up in a household where we got enough attention at grocery stores when buying vegetables. Look at you, hoity-toity, showing off. Look at me. My name is Andre. My parents love me. I love my parents. Everything is great. You know, Andre, we have a whole separate live chat and everyone's there but you. And we just talk about how you're not a bad guy, but we're all a little sick and tired of how great your life is. Because honestly, I'm going to say this, it makes you unapproachable. It makes you unapproachable that your life is so great. And once again, none of us are hating on you for that. But just, dude, you just don't get it, man. Sometimes life is a little tough. You're trying to come off like, no, look at me. I was lost in a grocery store too as a child. Yeah, you're just saying that now because the way you're acting right now, you seem very much like a person whose parents always had eyes on you in every single grocery store. And we've all been very worried about how to approach you on this particular subject. But obviously, with the stressful evening I had, the morning I'm having right now, with a cat attacking me biologically and also physically, I don't have the emotional barrier I need to not tell you what's going on, Andre. This is the truth. This is absolutely the truth. All right. Where he was lost in a Whole Foods. Andre, we can tell you were never lost in a grocery store as a child, and it really shows. It really shows in how you're acting right now. Where are we at? What's even happening today? It's going to be one of those days. We have a lot to talk about. Ken Griffin, we're going to be doing his whole live thing at 10 a.m. We can review the wholesale numbers that came out, the retail sales numbers that came out, and the jobless numbers that came out. AMC completed its dilution, so it's actually up a little bit in pre-market right now, I believe. I think it's up 8% last time I checked. It is now up 8.5%. Yeah, I guess if you want to be logical about it, you could point out how we're still below where we were when they announced the dilution. But hey, that's just you being a negative Nancy. Is Matt on his period? Z trades. That's oddly offensive. I recently was taught on TikTok that men can in fact have periods. It's not just a chick thing anymore. We're all the same. We're all the same and we're all different and special, but the same. We're all the same in the fact that we're all different and special and unique and 100% right. That's life. That's life right there. All right. Should we start the show? Are you guys done screwing off this morning. This is a serious finance show. This is a show where we talk business, we talk numbers, we talk trading, and there's no time for tomfoolery, malarkey, shenanigans, the major three. There's no time for any of the major three. Once again, for those of you who are like, whoa, why is Matt getting angry right now? It's because I'm seeing a lot of tomfoolery, a lot of malarkey, and a lot of shenanigans. I'm seeing the major three in here day in and day out, and I've had enough with it. I'm to my wit's end. I don't know what that means, but I want to say that. Oh, speaking of cool words and stuff I've learned about, I guess back in like the old age, people used to call their hands their daddles. I think it is. Daddles. Oh, wait. I think it was daddles. Daddle. How would I look? Daddle. It was like an old-timey daddles meaning hand. Yeah, daddle. Plural daddles. Slang. It's obsolete. Like it was popular way back in the day. So slang obsolete. Like I want to know the time Northern England daddle. Like, how sick would that be if you're at a bar and you're about to get in a fight and you're like, you want to catch these fucking daddles? I think we should bring it back. Slang obsolete. The hand or fish use the phrase, tip us your daddle, meaning give me your hand. So I also learned that yesterday. So maybe I shouldn't be complaining about how absolutely horrific my evening was because I learned about slang words from however long ago. I wish it had the time period that this was used. But imagine, dude, imagine if we were listening to a UFC fight and all of a sudden Joe Rogan gets on. He's like, and he just clocked him with a right daddle. Like, it sounds so much cooler. So much cooler. So I just want to bring that up. So no matter where this show goes, you guys can't say you didn't learn anything because I don't think a single person in here knew that daddle was an old-timey, obsolete slang way to say hand and or fist. So whatever it is, you learned something. So you cannot leave the show pissed off. Well, you could leave the show pissed off. Obviously, that's your right. But you can't say you didn't learn anything because you now know daddle. Daddle. There was it was actually a really cool TikTok. It went over all these old slang words that we should totally bring back. And was another one for drunk, half-ratted, half-ratted, meaning drunk. I think it was half-ratted. Half-rats. Tipsy, mildly drunk. Greens, half-rats. Tipsy, mildly drunk. I want to know how to use it. I'm half-rats. Oh, I'm ratted, brother. A person ratted. A person who is drunk or drinks habitually to excess. Cited a heavy drinker. So ratted, half ratted. I got so ratted last night. Just another one you could use. Just another one. Just sharing the interesting things I find on the internet. But I guess we should get to the show because it's almost time for the show. This is like talking to my grandpa. We should bring it back. I think they had some things that were like spot on. Yeah, after I caught a couple daddles last night, I got half ratted. Matt, have you researched Good and Glad? Nope, it is on my to-do list though for this weekend. Obviously, I was pretty deep into old Victorian era slang, which is a common aspect of what I do at night. All right. Well, now that we're done with the malarkey, the shenanigans, and the tomfoolery, we should talk about the market. Stock futures climb as Wall Street eyes another inflation report, which came out at 8:30 a.m. ET. Let's give this the old reload. So a couple things happened today before that. So at 8:15, we got an update from the ECB. They made an interest rate decision at 8:15 this morning. The world was expecting them to keep their interest rate at 4.25%, But surprise, surprise, it came in at 4.5%. On this news, the market actually popped, but I want to show you what happened here. Boom, dollar ripped at 8.30. That's because of a different report, but right here is the 8.15 report. So we have two things today that caused the dollar to go a little bit crazy. 8.30 was the reports out of the U.S., but 8.15 got things going with the ECB decision. So past that, core retail sales, the forecast was 0.4, came in at 0.6. Retail sales themselves came in at 0.6, and we were expecting 0.2. On CNBC, they were expecting 0.1. So retail sales coming in a little bit higher than expected. So maybe not the best sign for inflation. And then more evidently than not the best sign for inflation is right here. PPI, the producer price index. Yesterday, we got the consumer price index. Today, we got the producer price index. The forecast was 0.4% for month over month reading, came in at 0.7. So retail sales, a little higher than expected. Inflation, a little bit higher than expected in producing, and also representative of inflation in a general sense. And then initial jobless claims coming in pretty much as expected. So the ECB press conference is going on right now. But with all of this, I'm a little bit shocked. I mean, the dollar going up isn't the biggest surprise, but looking at what's going on with the S&P 500, if it ever opens. So let's go back a little bit. Where is 8.15? So 8.15, it popped on the ECB decision. And then right here, we obviously came down into the 8.30. At first, the reaction was negative, which the fact that we came in a bit hot made sense to me, but going the way of yesterday where we end up popping on it. So I just want to be the reminder of yesterday that, yes, we did get this report that at first the reaction was negative and the market sold, ended up popping. I think a V-shaped response that shocked a lot of us. And then we ended up getting a sell-off in the close. So be careful. They might be setting up to have that type of choppiness and craziness once again. I am not going into today confidently bullish. I'm not going into today confidently bearish. The market's looking good right now. I mean, we're just below 449. If you're looking on the daily chart, that's actually close to a pretty nice breakout level. Oh, quick shout out. This is the kind of stuff that I usually put in locals, but I do want you to know that there's a downside gap fill opportunity today, a full dollar. 447.71. That is the high from yesterday. We are going to be opening most likely just below 449 if we hold here for the next 30 minutes. But pay attention to this because there's a downside gap fill opportunity to 447.71. Not guaranteed, but a very high odds play. We are not seeing that in the NASDAQ. The NASDAQ not going up as much as the SPY. But anyway, with the SPY, yeah, obviously that's an interesting play of the day. If there's a little bit of bearishness and you want to ride that trend, you could be targeting that. But if we hold above this 448, 449 level, that's interesting because there is an upside gap fill to 449.17. So what's that? About 50 cents away right now. And if we get above and hold above that, my next target would be closer to 450. It's a technical level. It's a key psychological level. But anyway, those are the upside and the downside levels I'll be looking at for the overall market, and a little bit of a update of what happened in Europe this morning and also what happened in terms of the US. China cuts bank's reserve ratio to aid recovery. The People's Bank of China, the PBOC, said it would cut the reserve requirement ratio, the RRR cubed, for all banks except those that have implemented a 5% reserve ratio by 25 basis points from September 15th. The move came after the world's second biggest economy has struggled after the post-pandemic recovery faltered. So we know, I've been talking about this a lot. There's a lot of little signs that add up to some pretty serious signs that China's economy is maybe not trending in the right way, a little bit weaker than some of the big, especially oddly enough, U.S. Wall Street participants would probably want you to know or believe. Everyone's worrying about China, but the real pain is coming from the Fed. I guess I feel like, for me personally, I'm equivalently worried about both. I mean, they both need to be considered. For all the worries about potential global spillovers from China's economic troubles, it's actually the U.S. Federal Reserve that's inflicting pain on much of the world at the moment. The reason, although financial markets have been pricing in rate cuts for the latter part of 2023, which is not going to happen. Why do the markets, I mean, we don't have to turn back the clock that much to get analysts, like people who this is their job, saying, oh, we're totally going to get rate cuts in 2022. At the start of 2022, when we were doing the rate hike cycle, They were already predicting the cuts at the end of the year, the start of 2023. And from the get-go, that was insanity. And this is the same level of insanity. We are not going to get rate cuts in 2023. We're already in September. We're still talking about one more rate hike in November. And they think we're going to get, rate cuts in December? It's not going to happen. That's crazy. That's malarkey. That's tomfoolery. That's insanity. It's become clear that the U.S. interest rates are likely to stay high as the threat of a recession recedes, but U.S. inflation continues to show signs of stickiness, particularly in services and shelter. That's where the subsectors of inflation that are just not going the direction that the Fed wants it to go. Investors are coming to grips with the idea that the federal funds rate could remain at the current 5% plus level, the highest in 22 years, well into next year. Most likely will. Many middle income and developing nations are having to delay plans for cutting rates, even if it means curbing growth, because the risk of triggering destabilization, capital outflows, it's hard to decouple completely from the Fed. Countries are feeling the effects of the Fed's actions in various ways. Higher U.S. rates make dollar-denominated assets more attractive, sucking money out of the markets and causing their currencies to depreciate. This dynamic adds to the inflation pressures and makes it harder to pay back debt when issued in dollars. It's referred to as counterparty risk, or it's an aspect of counterparty risk is probably the most accurate way to say it. But yeah, we see the dollar index popping. Remember, this isn't just the US dollar. The dollar index, Dixie, DXY, is tracked by the dollar versus a basket of other currencies. And within that basket, it's mainly the euro, has about 50% weighting. And then right after that, second within the basket is the yen. Third is the pound, and there are other things in the basket. By the time you get past number 3, who gives a shit? But anyway, the dollar's popping, dollar having serious strength. So on a relative basis, the US dollar is strengthening relative to other currencies. And that's what the article was just talking about. If the dollar is becoming more expensive and there's other countries doing business with that currency and they have to pay off US debt, well, the debt's technically even higher because of the exchange rate. So just something to consider. Let me update this page to see if anything's changed. But with the CPI update and now the PPI and retail sales, 97% chance that by the time we get to Wednesday, September 20th, there is no rate hike for us. We're currently at 5.25. So they're saying 97% chance that we stay there. Now, where the numbers get interesting is when you fast forward to the next FOMC meeting on November 1st. As of now, there's about a 40% chance of some form of rate hike, looking at 5.5 and 5.75. So putting these two together, 38 plus 1, 39, so I'm rounding up to 40. And hey, if we're at 40, we might as well round it up to 50. 50-50 shot of some sort of rate hike at the November meeting. Not a rate cut. We're talking about rate hike still. So just wanted everyone to be apprised of that. I in no way think we are getting a rate hike in September. Obviously, crazy things could happen. We just got a surprise out of the European Central Bank. So surprises do happen, but my base case is that we are going to stay exactly where we're at when we get to the September meeting. And I think really all eyes are on the November meeting. Biden to starkly contrast his economic plan with GOP Maganomics as shutdown looms. I like how we have Bidenomics and Maganomics, and they all kind of just like add up to literally meaning nothing. Congress has just 2 weeks to pass the 12 appropriation bills and get Biden's signature. Failure to do so by September 30th would result in a government shutdown, leading to furloughed workers, agencies closed, and many essential programs placed in peril. The Maganomics vision to be outlined by Biden is based off a budget plan released by the Republican Study Committee in June. I like how so much of politics, and I don't like this, I'm saying this facetiously, I actually particularly hate it. I feel like so much of politics is really just branding and PR and not actual rules and logic and regulations and intelligent thought. It's just like, for example, the inflation bill by Biden, it had nothing to do with inflation whatsoever. It's just like, what's a good name? Because what they do, and both sides do this. I'm not saying either side is innocent of this. In fact, I'm specifically saying both sides of the aisle are particularly guilty on this. They come up with something and then they name it in a way where if you vote against it, you look like a scumbag. So the Inflation Reduction Act, well, obviously it looks really bad if you're voting against the Inflation Reduction Act. But we all know that the Inflation Reduction Act, when you look into it, has nothing to do with inflation whatsoever. So it's this weird political game where apparently enough people in the world continue to get duped and hoodwinked by it because they keep believing it. They're like, oh my God, look at all these Republicans who don't want to fight inflation, when they're saying, but actually it has nothing to do with inflation. And this is just one example. And in reality, I'm sure you guys could list 100. Both sides do it. Both sides are guilty in it. And it's just particularly frustrating. So today is big for various reasons. We got the ECB decision. We got the retail sales. We got the PPI. We're going to get an IPO today of ARM. ARM is in the world of NVIDIA, Oracle, AMD, Intel. They help with chip design. Think of the processing chips. So they're going to be valued at how many billions? So ARM prices its IPO 51 per share, valuing the company at 54 billion. So it's very, very popular. You might not know this company based on its name, but I covered this in the video yesterday. It pretty much, if you have a phone, you've used products that are either designed by ARM or some in one way or another affiliated with ARM. So it's a very, very influential company. Maybe not in terms of its like fame level, but in terms of industry and business, ARM's an important one. I like the company. I have nothing bad to say about it. I myself will not be participating in this IPO today just because I've been burned on so many IPOs that you only have to touch a hot oven so many times before you learn your lesson. So I wish all the success to all of you who are participating in it. I want you to crush it. I'm going to be watching it. If it starts trading and it's not on my screen, please let me know about it because I do want to watch it today. But I'm watching it just for the fireworks. I personally will not be trading it. SoftBank resists temptation to try for more with 4.87 billion ARM IPO. SoftBank finally having a win because I feel like a lot of the news we cover on them, losses and losses and losses.
Matt, it's interesting when the bankers were trying to price this, Masayoshi-san of SoftBank had said that he wanted to do $51 a share instead of the potential $52 a share to ensure a smooth debut today. But how much
it's going to start trading way higher, above 50. By the time it hits the public market.
I mean, clearly valuation is incredibly important to people, and really ARM does have to grow into that valuation. They've set out a kind of very clear story that's kind of, essentially ARM is the foundation of everything to do with technology. It's at the core of pretty much every kind of processor out there, and they have this huge addressable market. I think it's roughly about 100 times earnings if you look at the historical reported numbers, so they need to grow sales and profits quite substantially to kind of bring that multiple down. That's clearly what...
Someone said this is my doppelganger. You think that I look like a middle-aged man who hates my life? Yeah, I own a dark blue suit and a white shirt. And yeah, I have a couple white hairs in my beard. But you're going to go on to the point. Did you not hear my broccoli story and how I obviously love life enough to find myself in the grocery store? That's the major takeaway that I don't think a lot of you guys got from my broccoli story. You got to get a little lost to get a little found. You're never going to be found in this life if you don't start off as being lost. It's impossible. You cannot be found if you're not lost. So obviously you got to get a little lost to get a little found. And this guy is clearly, I don't know if he's lost, but he's definitely not found.
Investors are believing that they can do.
He also has better eyes than I do. That just dark blue hazel eye. I'm jealous. Quick update on today. Obviously, I know we have about 20 minutes to go. Leaning a bit bullish. Now, the bulls have won this day 54% of the time. The profit factor is 0.82. But I put leaning bullish because look at what's happened over the past 15 years. So for the first 10 years, yeah, it was like coming down a little bit, not the best. But for the past 15, we've actually had a nice trend to the upside. So I would argue from a seasonal standpoint, it's not a strongly bullish day, but I would argue that, yes, the bulls are favored. If you want this, I give it out for free. I'm going to start doing weekly newsletters with this and other information in it. But macros.locals.com, it's in the description of the video. And I'm going to give you seasonality. I give you the seasonality for every day of the week, all the major earnings. We're not really in earnings season right now. All the major macroeconomic events and reports, I put that in there. A quick little breakdown, some cool pictures that AI generates. So doing all that for you, it's free. Macros.locals.com. Sign up. Also, speaking of locals, for the people who are premium members, we are now 6 for 6. The signal it's looking pretty good. Thus far in the week, 2 on Monday, 2 on Tuesday, 2 on Wednesday. all 0 DTE trades. It was a call credit spread on the SPY, and obviously yesterday we closed below 448, and then it was also a call credit spread on the Qs. Obviously we closed below 375, so we are now 6 for 6, 100% accuracy. And I don't know, I'm trying to think, with only having $200 in your account, that would be the minimum requirement. Actually, it's a little bit less than this. You would already be up about $70, $80. So almost a 50% return on the count this week alone. 5 things to know before that stock market bell goes diggity ding ding ding. Today, Thursday, September 14th. A beautiful September 14th. All mixed up. Yeah, I mean, the market's just been kind of consolidating right now. We're seeing a bit of strength this morning. Ooh, it keeps going up. Please don't forget, if you're just tuning in right now, first of all, demerit, you're late to class. You should feel embarrassed. But I do want you to know that there is a downside gap fill opportunity on the SPY, 447.71. I'm not necessarily saying take that trade out of the gate. Obviously, you would first want to wait for some weakness. What's leading inflation? Well, mainly has to do with shelter and services. What are they going to say? It is where rose economists say higher gas prices, while notable, should be temporary. Yeah, I mean, core is the issue. So the food and energy is not really the problem at this point in time. ARM time, IPO today. The IPO season is starting to heat up. We know Instacart is going to be IPOing. We know Birkenstock is going to be IPOing. ARM is going today. So more IPOs should be fun. Citi regroup. I don't think we have the biggest Citi traders in here. Recruiting hit. Google's cutting back hundreds of jobs from recruiting organizations as part of a bigger pullback in hiring that sets to take place over the next several quarters. We're just seeing a continuation of a lot of tech companies and companies in general either laying off people or just not hiring and letting attrition play out. So right now, there's obviously some concern in the market, and everyone's kind of going into more of like shoring up resources type of a time. So just want to let you know there that we're seeing a continuation in it. CNBC exclusive. CNBC media alert. Citadel CEO and founder Kenneth Griffin to speak with CNBC's Sarah Eisen on Squawk on the Street tomorrow, Thursday, September 14th, 10 a.m. ET. So our boy Kenny G, we will be listening to it. If you ask me, I think he's trying to get a media appearance in before the Dumb Money movie comes out. I think he's going to have some offhanded remarks about memes and squeezing and dark pools and market makers. So definitely listen to this, 10 a.m. We have about 45 minutes. So if you're watching this right now and you're like, yo, I clicked on this, like I didn't know you were streaming it, what's going on? And like you're watching it after we're done, just fast forward. I'll mark it out. I'll chapter it out. So you're going to want to fast forward it if you are not watching this in real time. But we are going to be checking that out at 10 a.m. today. Tucker had some interesting commentary on hyperinflation, so we'll be coming back to that. But we did get a big update from the world of AMC. This was posted last night. And actually, if you've looked at it this morning, AMC is up right now, 8.7%. A rarity to say for AMC, that it's actually having a winning day. But here's what we have. AMC announced today that it has completed its previously disclosed at the market equity offering that was launched on September 6th. So September 6th is when it came out. AMC raised approximately $325.5 million of new equity capital through the sale of 40 million shares before commissions and fees at the average price of $8.14. So if you do some quick math on that, you know that we recently went through a 10-for-1 reverse split, and that basically means that they sold at an average price of 81 cents. Is that a good thing? I mean, the money helps them fight off bankruptcy a little bit longer, but I don't know. I understand that they need money. I totally get that. But they sold it at an average of 81 cents when you account for the reverse stock split. And then also, I mean, I'm interested in seeing how today plays out. But we, in this time period, we're at $9 right now here. I'll just take it at 9. We are down 34%. 34%. So basically, if we look at the market cap is currently 1.3 billion. So let's just do some quick math on this to realize how much of a market cap hit they had to raise money. So 1.3 divided by 0.66. So 1.97 minus 1.3. So basically, they caused market cap to drop by $670 million. So is that necessarily worth it when your company's value drops by $670 million to raise $325 million? Now, obviously, that might not be true by the time the market opens and starts trading. Obviously, we could go higher, and the higher it goes, okay, maybe the trade-off is a little bit more reasonable. I'm just talking about this exact moment in time. The market cap took a $670 million hit when they only raised $325 million. So that is a tough thing to swallow. Now, obviously, I do want to, the market's not open yet. We could keep ripping. And if we do keep ripping, AMC, if it can get back up into the realm of $13, $14, well, okay, you raise money and there was no market cap hit. But we're down here, literally made an all-time low at 705. So it's bounced off of that, but this is the situation we're currently dealing with. You can see it a little bit better on the weekly chart, but it's just getting absolutely demolished right now. It's sad to see. So this is a bit of positive news. It's good to know that they're not being diluted at the moment. Obviously, they could always start a new round of dilution, but by the time you really look into these numbers, 325 million, keep that in mind. That's how much money they raised. Let me look up AMC. Let's look at its financials. And then let's do latest on the left. Balance sheet. Dude, why are there so many fucking pop-ups on this website? Balance sheet. Total assets. Last report, 707 million. Total assets long-term, 8.7 billion. And then if you look at its short-term debt, 1.5 billion. Long-term debt, 11.2 billion. But the real debt that you have to consider, because we don't necessarily want to count these capital leases, is right here. They have 4.8 billion in debt. 4.8 billion in debt, and they raised 325 million. Those numbers are very, very far apart. Where are actually, I was looking at this the other day, their income statement, revenue. I want to just see their debt payment, interest expense. This is how much they're paying on their debt. It's crazy. Interest expense, 362 million. Net interest expenses, 360 million. That's how much they're paying on their debt alone. So basically, they raised not even enough money to pay 1 year's worth of debt. Let's actually go to quarterly on this. Quarterly, yeah. The last quarter was 93 million. So if you annualize that, that's 400 million. That's brutal. What was the interest payment just for all of last year? Interest, 340. So no matter how you do it, this is like the low number. They're just not actually paying off their debt. Just the interest on their debt is, we didn't raise enough for that. That's, I don't know. I'm not the biggest fundamental person. I never want to cosplay as a fundamental investor. Yes, I do fundamental investing, but I just kind of pick big companies that I enjoy their basic numbers. I enjoy what they're doing. I know the space that they're in. AMC is now forcing me to do fundamental breakdowns and analysis on a company to learn it a bit more. And when I just look at these basic things, I'm like, well, you just lost 670 million in market cap to raise 325 million, which is this. It's just the numbers need to improve. There needs to be more movies. There needs to be more revenue. And can things improve? Oh, of course they could improve. It's just obviously that's the task that management needs to really take on very seriously, is they need to always just be focusing in on how do you get hundreds of millions of dollars more in revenue coming into the door. So I want it to be successful. I want it to crush its partnership with Taylor Swift, and it very well could. I'm not saying that it's not going to. I'm not going to be a naysayer about it, but like I think we just need to do a better job at like understanding the size of the debt burden, and also on a relative basis, like that compared to its revenue and its profit and what's going on. Because in my mind, the numbers aren't really adding up the best right now, but hopefully this is just a gully. Hopefully this is just a low, and maybe this concert thing is going to be more popular, and maybe the success of it will bring even more top tier artists in. Maybe they'll start doing things with comedians. Maybe they'll do more things with sports. I mean, they have a lot of opportunity, and I think the question is just like, are they ever going to seize it? I guess before I get too much into it, because obviously, as I said, I'm not the biggest fundamental investor by any means. What are your thoughts on it? I want to get your thoughts, just because like maybe I'm overlooking something. And like I said, this is very rudimentary. In the very short term, this is obviously positive. Like clearly it's positive to know that it's not being diluted, at least at this moment in time. So that's a good thing. That's why you're seeing the market go up, or AMC's stock price go up. But from a I just don't necessarily understand the fundamental thesis for AMC, just because I see how bad the debt is. I see how bad the interest payments are. I just think there's better fundamental opportunities. I like being slapped. I do like to fish down by the river. My thoughts, I want out. Well, I sold most of my AMC, so you're welcome. I hate river. All right, so you guys really don't have much thoughts on this whole AMC thing. Can you make something like a cheat sheet for some market data? Example, DXY up, stocks down, yields up, bonds down. What would that be? Also, others you could think of? Yeah, I could work on that. That's a good suggestion. It'd be a little bit more complicated because you would have to also do like other environments. Like the dollar up doesn't always mean the stock down, like the market down. So it'd be a little bit of a complicated cheat sheet, but I could work on something like that. Hit us with what are you doing, Step Bro? Maybe if I get some good trades in here. Why would they not be liquidated portions in order to reduce the debt? Portions of what? They don't own any theaters. They lease the theaters. They definitely don't. It's not like they could sell off real estate because they don't really own real estate. All the theaters that AMC are in, it's all leases. And you can see that in the balance sheet. That's like some of the debt is like just from what the lease is. Thoughts on TKO? TKO, that's the new fighting partnership thing, right? No trades. Right? Am I getting that right, that this has an association? The USCW, yeah, I'm pretty sure TKO is the parent company of, it's the parent company of the UFC. And apparently there's literally zero trades in pre-market. That's a little bit strange. I just want to make sure that I'm not spreading any false information on this. TKO operates as a blank check company formed for the purpose of effecting a merger capital stock. I'm pretty sure this is the UFC, which means that this will be the company that WWE is not trading anymore because they ended up buying it out. So TKO, I'm pretty sure, is the parent company for the UFC, now the WWE and all that stuff. I watch it. I'm a fan of that. I just don't really know much about the hardcore fundamentals. Like, I don't know. I mean, it looks like it's growing. Nice higher highs, nice higher lows. It seems like the generic trends to the upside. Looks like it got beat up a little bit there when there was no fighting, but I think the fan base is just continuing to grow. I would have to fact check some trends on that, of checking just like, is the UFC, is the MMA getting more popular? And you could probably see that with something simple, just like a Google trend search. Are more and more people watching fights? And if so, I mean, I could totally see a reasonable, actually very reasonable long-term thesis in the world of this, because I believe it's just a growing sport. Does AMC hold 9 or go higher? We'll find out. We could definitely watch it throughout the day. I just want to make it clear, I'm no longer actively trading AMC. I haven't really actively traded AMC since either 2021 or maybe early 2022. I'd have to check it. But for a year and a half, 2 years now, all I've done is literally just hold my AMC stock. Yes, before this, you guys should all know that I've actively traded options. You saw it. The streams are there. But as of right now, I just own AMC stock. No calls, no puts, no short position, just AMC stock. And I think it comes down to a question of capital efficiency. Obviously, we all have a finite amounts of capital, and I just think there's better opportunity in the market in the short term than AMC is presenting right now. Obviously, that can change from day to day, so I might actively trade it in the future. I don't know, but right now I'm literally just sitting on it. Sitting on it. Matt lost his diamond hands, LOL. What are you talking about? How did I lose my diamond hands if I'm sitting on the stock? I have synthetic puts on AMC, dude. That Travis guy is such a clown. Like, literally just completely misinterpreting things he's reading on Investopedia during the call. Like, that guy, such a joke. Why not write covered calls against the shares of AMC? I would do that, but you can't do covered calls on public. So for me, it was a trade-off. Do I want to be able to publicly show my position to everyone, or I want to be on a brokerage where I could do covered calls, but then people wouldn't have their access to my position to prove that I'm long on the stock? So it was a trade-off. If I wasn't in the situation I am, like if I was just trading with no like internet, no show, no influence, as much as like a cringeworthy word that is, I would be doing covered calls. If you're investing in something, I think it's kind of silly to not do covered calls. It's only in very rare circumstances would I agree that not doing covered calls is like a smart thing. Generally, you're just lowering your cost average. Like, that's the effect of it. It's just you are getting in at slowly but surely you're collecting premium, which has the net effect of just lowering. Like, why would you not do it? Couldn't you keep one share in public and move the rest elsewhere? I could, but that sounds like a lot of work. I've already had to bump my shares from Robinhood to Webull to public. I don't want to do it again. Keep a share there, sell the rest, and then rebuy on a different brokerage. Like, it just, if anything, my trading with AMC, I'm just kind of mentally over it. I'm much more interested in actively trading the overall market or bigger movers like Tesla, Nvidia, Netflix, all things that like can go absolutely sky high. Or sky low. Like, it's just more of they have better movements. It's more of a better efficiency thing. Matt, did you even look at the dollar? I did. But I don't know why you have an attitude about it. It's also weird that you have an attitude about it when I also already did it and talked about the dollar and how it's ripping. The market's about to go ding, 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 ding. Before that happens, just so you know, Ken Griffin will be speaking at 10 a.m. Obviously, we're going to listen to our boy Kenny and just see whatever ridiculous things he has to say. We have this interesting episode from Tucker Carlson on hyperinflation, so I think that's going to be a good listen. And let me know, are you bullish or bearish on the day? Please comment. Dingity, ding, ding, ding. The casino is open. Best of luck to all. Play responsibly, and if not, have boatloads of fun. He made like $200K in other trades in June. Why would he spend time on AMC? Yeah, there's just better opportunity elsewhere. At one point in time, AMC represented amazing opportunity. At one point in time, GME represented amazing opportunity. And in the future, they might represent amazing opportunity again. But right now, we're just not seeing those crazy movements. To make a lot of money, you need big moves. You need a lot of volatility. And AMC is moving, unfortunately, just to the downside. So, yeah, I could short it and make money, but I also think that would cause Twitter to break. So I kind of just don't want to do it. I don't know why, but it feels like a little bit just like immoral to me. I'm not necessarily as much against buying puts as much as I'm really not against going long on puts on it. I guess I could do that and make some money. And I guess I've always believed that. I think if you want to buy calls, if you want to buy puts, if you're using it, if you're buying puts as a hedge against your core position, whatever, do whatever you want. If you want to sell calls, if you want to sell puts, I don't really care as much about that. But like straight up shorting AMC, I don't know, just gives me a weird vibe. I've never done that ever. on AMC. I never planned to do that. I'm not going to do that. But I guess recently there was a good argument to buy puts. There really was. I don't know. Probably should have. But now the opportunity is like probably passed. Do you think AMC can touch 100 as in like 10x its value from here? Not in the short term. Like it's possible if they can turn the ship around and take care of their debt situation. It's theoretically possible, but would I be holding my breath on it in the short term? No. Someone said 100 cents maybe. Yeah, I mean, AMC. We'll see how it goes. But market taking a little bit of a hit this morning. I am all geared up here. Let me show you guys this. I'm all geared up with the prop account again today. Oh, folks, if you want to do this prop account with me, I think it's the great in between of a paper account and your actual money. So the way prop accounts work is you trade. It's called a challenge, a combine, a demo, whatever. You have to trade well enough on it. And actually on Top Step, you can prove your success in as little as 2 days. And if you do pass it, then they actually fund your account for you to trade. I don't want you to think that the challenge is easy. I'm now on my 3rd attempt myself. I did pass it on a different prop one that took me 6 attempts. I'm attempting to do it faster, but it's by no means easy. But I think it's just a lot less risk because you're paying to take the test and it's a small fee. In fact, it's pinned to the top of chat. You'll get 60% off. And if you do it, great, you're funded. You're using someone else's money. And if you don't, well, okay, you didn't blow out your own real account. So in terms of risk reward, it's a nice in between a paper account where you're risking nothing, but maybe your emotional state's not right there, or risking all your own money in your actual account. So I view it as a nice in between. And right now there is an affiliate link pinned to the top of chat in the description of the video. Become a funded trader. If you use that link to take the test, you'll get 60% off. It's like 40, 50 bucks. And also for me, when I failed the first one, I got an email to take a test again for another 50% off for that. So I think it's like 20, 25 bucks. So check it out. It's pinned to the top of chat. It's in the description of the video. If you guys need help setting it up, I will help you out. What's the rev share once funded? Let's see if we can find that out. Resources, become a partner, our program, how it works. What is the trading combine? So this is when you take the test, trade with products. So I'm trading futures. I'm using NinjaTrader. You could also use Quant Tower. Where is the profit split? Right here, 90-10. Take home 100% of your first 10,000 and then 90% after. So if you make 10,000 in profit, it's all yours trading their money. And then after 10,000, you keep 90% and they keep 10%. So you keep the first 10K, which is awesome. And then after that, 90-10 is still a pretty awesome split. When you're using someone else's money, they're taking the risk, you're not. And this is all the rules on it. I think it's awesome. I'm by no means a prop trading expert. This is the second one I've ever used. This is the second month I've ever used it. I'm trying to get funded with them. So I'm more so live streaming the whole process to you guys. And if you know more about it, feel free to DM me, shoot me some information. Happy to talk about it with you. I'm always willing to learn. But if you want to do it alongside me, maybe you could do it faster. Maybe we could help each other out and just like share some tips and tricks, that type of thing. It is pinned to the top of chat. It is in the description of the video. If you use that link, you'll get a 60% off for the test. And then for myself, when I blew up the first one, they ended up giving me 50% off on top of that 60% off to take the test again. I started my own brokerage with a guaranteed 10% return in 6 months. If you get it right, your returns are guaranteed. If you get it after 6 months, you get nothing. I also have a OnlyFans. Well, that doesn't seem right, James Dean. That doesn't seem right. What's the current float on AMC? 158 plus 40, 198 million. 198 million. I wonder if Ortex already updated. We'll see. We'll see. AMC. It did not. So it was 158 before the dilution. So now we add another 40 mil to it. So it's 198 million, which, I mean, this is all after the 10-for-1 reverse split. which also means the 40 million, think about it the other way. Before the reverse split, they diluted to the tune of 400 million shares. It was a pretty serious dilution. It was a very serious dilution.
Order filled.
Oh, wait. Why didn't that do my strategy? Shit. I didn't do the right strategy. Crap. Uh-oh. Shoot. So you can set up your own default like order types, whether you're like your order cancels order stop loss, like all that stuff. I accidentally had mine on none when really I needed to put it on my NQ strategy. On the right side here, you have the NASDAQ. On the left side, you have the S&P 500. Well, shoot. I guess if it just hits break even, I could go up, pull the ripcord and get out, but I think it's going to blow me out. I think it's going to take me out of this position anyway. Damn it.
Order filled.
Yeah, I knew it was going to. Well, that's a lesson that could all be learned. If you're trading here, make sure you have, if you're attempting to trade with a stop loss and everything and a target, make sure you have the actual order type strategy on. Lesson learned. I'm your guinea pig. This is on NinjaTrader. That was 100% my fault. 100% my fault. That's frustrating. That's frustrating. All right. We just got to wait for the actual, the real opportunity and, shaking off the cobwebs from the whole broccoli story. Let me get this. All right. Anyway, not too much going on quite yet. We'll do that. We'll do that. All right. The main thing I'm waiting for is this Ken Griffin thing to get rocking in about 20 minutes. If you're here to listen for Ken Griffin, it's all going down in about 20 minutes. 20 minutes. All right. What are we doing? AMC. Honestly, I thought it'd be going up a little bit more. Netflix has been getting beat up. Yesterday in the tech sector, that was actually one of the worst losses. It was down by about 5%, a little bit over by 5%. It was definitely, if you looked at the heat map, it was one of the worst losses of the day. The heat map hasn't updated quite yet today. But Netflix getting pummeled right now. Getting pummeled. All right, let's see what else we have going on. AMC coming down. I mean, it'd be nice for it just to actually have like one nice uptrend day. Like, is that really too much to ask for? Isn't there a PPI report today? It already came out at 8:30. If you're interested in the numbers, I mean, I'm going to give a more in-depth update of it for the update video today. But here are the numbers. What you need to know is PPI came in at 0.7 month over month when they were expecting 0.4. So it came in hot, potentially forcing the Fed to be a bit more hawkish. Retail sales coming in at 0.6 when they were expecting, depending on who you ask, either 0.2 or 0.1. So retail sales coming in hot, PPI coming in hot, initial jobless claims coming in a little bit short, and then obviously core retail sales coming in a little bit hot as well. Another surprise from our friends across the pond is the European Central Bank, their Fed coming in, deciding to do a rate decision 25 bips more than what people thought they were going to do. They thought they were going to keep it cemented to 4.25 as in not change it, and it came in at 4.5. So those were all the big updates of the morning. Already out, though, we're in terms of macroeconomic reports, we're not looking for anything today or actually even tomorrow. So in terms of major macroeconomic reports, we're kind of done for the week, just so everyone knows. ARM is most likely going to start trading around the afternoon today. Oh, I wish it would start. Let me know if you guys see that ARM starts trading. Let me know. Just waiting for this. So there's no set exact time. The expectation is it starts trading today, but there's no exact set time for it. So if you see it trading, feel free to let me know so we can bring it up and pay attention to it. The SPY may be doing something here. If I get those 0 DTE signals again today, I will put them all in locals. Thus far, we've gone 6 for 6. You could have traded all of those with a $200 account. Like that was the only requirement, and you would already be up about 40% on the account this week alone if you took those. Now, obviously, that's a pretty good run. Generally, you don't have 100% accuracy, but hey, when we get a little bit lucky, of course, I'm going to brag about it because I want you guys to look at it, because I want you to know that I do believe there is a statistically sound way to trade 0 DTEs. I really, really do. But some people disagree with that. Media disagrees with that. Wall Street disagrees with that. But I think I have the math to show that it is possible, and I will be going through it and obviously publicly stating it to show you that, no, it is possible to be consistently profitable trading a 0 DTE strategy. How do I get your alerts? I just post it myself. As of now, it's manual on locals, with mattkohrs.locals.com. It's in the description of the video. But just so you know, it's going to be more official in October when I pipe it into a Discord. So right now, there's no public Discord. Ideally, we're releasing a beta version of it this month where it'll be a quote unquote normal Discord where I'm in there obviously after the show and we're all sharing ideas, talking. Maybe we could talk about whatever. If you want to play video games at night, if you want to talk about sports gambling, all that stuff, that will be there. But on top of it, there's going to be like different channels where the signals that I'm creating and my other like programming quant friends, we're going to start piping the signals in there of whether things are overbought, oversold, gap ups, gap downs, earnings. So we're basically want to get a Discord that has statistically relevant information opposed to just like my issue with all these Discord trading communities is it's just a couple people who are like, oh, I'm buying this, I'm like shorting this, I'm doing this, doing that. But there's no math, there's no science behind it. There's no proof behind it. It's just people who, if you like their trading and trust in them, okay, you like that Discord and you trust in that Discord. But I get beyond frustrated because you could go to many of these traders and just say, hey, what's your edge? What percentage of the time do you win? What's your average winning trade? What's your average losing trade? How do you attack it? How often? They don't know the math and stats around their own strategy, which I find particularly frustrating. So I figure, why not put in effort to make an actually good one that hopefully makes value for people? So that's what I'm working on. From a technical standpoint, it's proven to be a little bit more difficult than I thought it would be, but that's fine. I'll figure it out. So in the meantime, I'm just manually, whenever I have a screen up over here, whenever I get the signal, and it doesn't produce it every day. Sometimes the market's just not there for that. But the days that it does, I just put it in there, and thus far it's 6 for 6. So even if you took one lot, you'd be up $70, $80. The premium for locals is $10. So you would have already paid for almost an entire year of it. And I've made this promise to you, and I'll just reiterate it. If there's a month that goes by that I don't post at least one trade that would pay for your monthly membership, well, I'll refund everyone. So AMC Discord sub channels, AMC rants, macro trends, algorithmic trading, cat care, love language, fashion chips. Jason, did you hack into the Discord? How did you know that? How did you know those were the main things? AMC rants, macro trends, algorithmic trading, cat care, love language, and fashion. Jason, are you a hacker? Like, what's going on, brother? How'd you know that? All right. We're gonna have to look into Jason. That someone is feeding him inside information. I don't think I like that. I don't think I like that in the slightest, Jason. He hacked the mainframe. He got into the system. All right, Ken Griffin should be doing his interview in about 15 minutes, so that'll be fun to listen to Griffin as we are also degenerately trading. Shout out to Tesla. Tesla getting a little bit of a bounce here. Shout out to old Tesla. The old Tesla. Be careful for fake out breakouts and fake out breakdowns like we literally just saw on the SPY. Check this out. Little bit of a fake out to the bottom and they pop it right off. We've seen that like 2 or 3 times yesterday. We already saw it one time today. Just like these fake out breakdowns. Like honestly, I think it's become a very tradable opportunity in the short term to be like, like basically, if it doesn't hold it and then the next hour pushes to a new high, I think that's reasonable to go long in this situation, and you just risk the recent low. You have well-defined risk. Obviously, the reward isn't necessarily known because you might catch a nice trend, but I mean, if it pushes, you could just quickly move your entry to break even, and then you're just playing with the house's money. He's probably the one that hacked Vegas too. Maverick, did you see me covering that? Oh, my question to you guys are, do you like the update videos that we've been doing? Yes, no, maybe so. I'm always looking to you guys for some constructive criticism or just criticism in general, because obviously I want to make content that you guys enjoy the most and you look forward to viewing. So do you like those update videos the way it's been? Or instead of just saying yes or no, what about those videos do you want improved? Do you want them to be longer, shorter, different content, more trading centric, more news centric, more politics centric, more cat centric? What about those do you want me to make better? I guess is my major question. Which part of the development is proving difficult? I've experienced with Discord bots, if that is so the issue is in real time getting the signal generated in a way that it can get passed off to like the bot that's hitting the API to post it. So posting something in Discord is easy. The bot setup is easy. The issue is, how do I get something off of either TradingView or TradeStation that as soon as the signal is produced to pass that into a bot? That's proving to be a pain in the ass. Flex your muscles more? We can do that. Dude, I hit the stair stepper today, which doesn't really... What just happened to the Qs? Why did the Qs just dip so hard? Was that real? Oh, no, it wasn't real. We have a data misprint. Data misprint. Not real, not real. That's always such a pain in the ass. Come on. Be better. Be better, TradingView. Be better. The SPY effectively just going sideways. The Qs effectively just going sideways. AMC bleeding this morning, but green on the day, up 5.2%. Tesla, nice upward trend all day. Nice upward trend. You know what? 840, 940. I want to listen to this because I heard it was really good. This is, I haven't checked this out yet. This is my live reaction to Tucker Carlson's episode 23. Hyperinflation and reckless monetary policy could soon devastate the global economy. We traveled to Argentina where it's already happened. Obviously, the reason they're in Argentina is because they are in like German post-World War II levels of hyperinflation, where there's that famous picture of people having to use a wheelbarrow worth of money, like just it's a mound of money to buy like a loaf of bread. But I heard it was good. People sent it to me, so I figured let's do a reaction.
For politicians, money is power. They always crave more. But because they don't actually produce anything, they've got limited ways to get it. They can hike taxes on the population and collect the cash at gunpoint. That's the most straightforward way. But it's also highly unpopular. Voters don't like paying higher taxes. They resent it. So over time, most politicians in most places decide it's a lot easier to devalue the currency. You keep the tax rate pretty much the same, you just print more money. At first, most people don't even notice that it's happening. The money seems free. This is how the US government just paid for the COVID checks and the war in Ukraine, and pretty much everything else that Washington has done for the past couple of decades. Just churn out more dollars. You can see why it's a popular strategy. But what happens if you keep doing it year after year? We really ought to know. So to find out, we flew to Argentina, a country of 45 million people on the Atlantic coast of South America. 100 years ago, Argentina was one of the richest places in the world. It had everything: abundant natural resources, vast open spaces, a well-educated, capable European population. Its capital, Buenos Aires, once looked like Paris, but probably richer. You can still see remnants of that time as you walk around the city today, but the buildings are ratty now and marred by graffiti. Argentina is no longer a rich country. It's one of the poorest nations in the Western Hemisphere. Nearly half the population here lives below the poverty line. Chicken for dinner is a luxury. The people are still impressive, the natural resources still exist, but Argentina's leaders have destroyed the country by devaluing its national currency. Argentina now has Weimar-like hyperinflation. It takes a brick of bills to buy lunch. Roads and bridges fall apart and nobody can afford to fix them. things unravel.
We spend more money as a country than we earn money.
This man is called Hernan. He's been trying to run a restaurant in one of the richest neighborhoods in Buenos Aires.
It's really, really hard to work in Argentina, to live in Argentina. We are tired. I think that's one of the main feelings of the people. No, people are tired of all of the politicians saying the same things a couple of years, and nobody does nothing good.
Over the course of the average month, the Argentine peso loses 10% of its value. In other words, everybody gets
so
10% poorer every month of the year. It doesn't take long for people to go hungry.
Our institutions have something wrong.
Diana Maldino is an economist and a candidate for the Argentine Congress.
Basically, the problem we have right now, we are 47 million people, out of which only 11 million people have what you would call a job. Slightly under
only 25% are employed,
and 7 million people work in the private sector. So 10 million people, 11 million people out of 47.
Another little liquidity grab right here.
25% of
and
the
that's
people.
counting the government workers. So if you take out the government workers, and that really is an electric windmill.
Yeah, 1/7 of the country would have a private job.
So that means 7 million people are working to support the other 40 million people.
And let me add something. 60% of the children are poor. So if you ask me, if 60% of the children are poor, the whole country is poor.
Argentina's currency is so inflated and worthless, it can no longer be used to buy anything of value. Cars, houses, even bicycles are priced in US dollars. The problem is the government lies about this. Banks are not allowed to exchange dollars at market rates, and that drives the entire population underground to the black market. So we're in downtown Buenos Aires. It's a Friday afternoon, and we're on our way to a cueva, a cave, to change US dollars into pesos. Now, the caves are the only place in the country that gives the actual exchange rate. The government lies about what its currency is worth and gives about half its value to people in exchange for dollars. So this is kind of the last outpost of economic honesty in the country, and of course the government is trying to shut them down. So we're going to see if we can exchange 100 US dollars for Argentine pesos.
Hola, he's my friend Tucker.
Oh, hola. Is there security here?
Yes.
This is so cool. Well, we're on the top floor of a building, unmarked. We just got buzzed in after waiting outside for a while, and trying to change a $100 bill.
Okay. How many money do you expect are you going to receive?
I don't know.
More or less. Guess.
Enough to keep my door from closing. A doorstop. Well, now I feel rich.
This is like Mad Max of caves.
Is this for $100?
That is. So how much is that worth? Thank you.
Well, thank you.
Amazing. How do you carry all this? Hold on. In a bag. In a bag. You know, it's obviously amusing, but it's also sad. Imagine if that was your country. This was your national currency, and it was
NASDAQ way weaker than the overall market this morning.
Home insulation, you know.
Damn.
And this was your work product. This is what you spent all day working for, and this is what you hope to feed your family with, and send your kids to school, and buy clothes. I mean, and it had been rendered worthless by greedy, dishonest pigs running your government and lecturing you about transgenderism, but in the end, you were left impoverished, and they were left rich. I mean, that's theft. It wasn't some sort of, savage situation in there. It looked like a bank almost. Though it's,
Win Gapville coming soon.
Had a kind of soda voce vibe. It was
447.71, and the Qs don't have one.
Imagine if
they did early,
going 4 times to a quote cave just to get the actual exchange rate on your money that you made by working. It's again, they're stealing and they're lying and they're enforcing that lie at gunpoint. They close those places down because they're this little window into reality that the government can't tolerate. That's what a collapsing society looks like. Everybody's moving backwards. Hammered. Nobody can tell the truth about anything. The functions of ordinary life have to be conducted furtively in caves. In Argentina, the incentives are now so perversely inverted that many people decide it's not worth working. They can make more money sitting home idle.
Sometimes we don't work because it's cheaper not to work than to work.
Why is it cheaper not to work?
What?
Because you have to pay a lot of taxes to the people. and the unions and those sort of things that are very, very expensive. So sometimes we prefer not to work.
Yeah.
Oh, that's incredible.
Is that common here?
Yes, it's common.
For young people in a country like this, the obvious
so
solution is to
crazy.
leave, and millions have. The future of the country slipping away forever. What's remarkable is that's just fine with the current Argentine government and with the Western media and NGOs that prop it up and relentlessly defend it. They're happy with the corrupt status quo. They're thriving. So they attack anyone who challenges the way things are currently done. Not surprisingly, they especially hate Javier Milei.
Creo que estamos los que laburamos. Sí,
Es
y generamos
cierto,
riqueza.
yo vos no te vi laburar
Parásitos
nunca.
como eso.
Yo vos no te vi laburar nunca.
Sí, bueno,
a vos no
punto.
te vi laburar
Bueno,
nunca.
bien,
Lo único que vos acá. A vos no te vi laburar nunca.
Está bien, parásito.
Tranquilo.
Parásito.
Parasite,
Estéticamente
parasite.
superiores. Sí, digamos, ¿cómo eran los edificios de los zurdos? Cuadrados, negros, oscuros, sin ventanas, eran inmundos. Teníamos las torres gemelas hasta que un hijo de puta las tiró abajo. Tenemos
I want
el
what that guy's
es
on.
una maravilla. Inventamos la minifalda y la bikini. ¿Saben qué? Yo
He's about to
decido.
throw some daddles.
¡Viva la libertad, carajo!
A ver, yo creo que el
Is
gran
that guy
problema es
half
un problema
ratted right
cultural.
now?
Es decir, esta es una sociedad que está infectada de socialismo. Los políticos son una suerte de sociópatas que quieren hacernos creer que nosotros somos inválidos mentales, inválidos en todo sentido, porque no podemos vivir si no fuera por ellos. En realidad, los que no pueden vivir sin nosotros son ellos.
Milei is an economist who's running for president here in the election next month, and the polls show he's winning. Milei's main observation is that things in Argentina are not working. Socialist monetary policy hasn't made people happy and secure.
Filled.
It's wrecked pretty much everything. It's destroyed the economy and families and the national spirit. It's enriched just a few. That's hardly a radical interpretation
Target
of events.
filled.
It's obviously true, and everybody knows
Just
that's
hit
true.
a little bit of a
But for
scalp on
daring
this
to notice
reversion
it,
right here
the
on
stooges at
NQ.
Jeff Bezos'
Locked
Washington
in a
Post
nice
and many other Western
180.
media outlets have denounced Javier Milei with rising hysteria as some kind of crypto-Nazi. Thankfully for Milei, the working-class young people who support him don't read the Washington Post. We sat down with Javier Milei for a long and interesting conversation which will air here tomorrow in The Space. Keep in mind as you watch it that it's not just about Argentina. It's about
Quick
you and your
180.
future too.
Tucker Carlson. Well, that's actually kind of interesting. I just from covering this knew that Argentina had pretty serious inflation issues. I didn't realize it was that bad though. That's actually really, really sad. Like crazy sad. I mean, it's better. I mean, didn't we have that a little bit in the US here during the Rona period where it was actually people were making more money by not returning to work just because the benefits were so great? Obviously, the Argentina situation is a bit different because more of like, I guess they talked about unions and taxes where like if you go into work, it's just not net profitable. But on the highest level of where it just literally doesn't make sense to work. I mean, we had that here in the US for a bit. More people were getting paid more to stay home, like because of the, I guess, government programs relating to the Rona times. That's crazy. That's crazy. I did find it a little bit weird, though, that someone pointed it out in chat. Like, your thoughts aside of, like, on this particular subject, it is weird that he, like, felt the need to interject the whole transgender thing. Once again, I'm not saying positive or negative about that. It's just like, did he really have to interject that? Like a little strange. A little strange. Venezuela's 100x worse. It's pretty bad for sure. They're both in pretty crazy situations. All right, Griffin should be talking soon. 10 a.m. He should be talking right now. Ken Griffin should be talking. Kenny Boy Griffin. Kenny Boy Griffin. Kenny Boy Griffin.
From one of New York City's Success Academy charter schools.
Here's the interview.
In a few
Sarah
moments, she's going
Eisen.
to talk to Citadel's chief, Ken Griffin. Sarah?
Good morning, Carl and David and everyone. Yes, I'm here at Success Academy in Midtown Manhattan, a high school that has 900 kids. It is New York's largest charter school, and we're here because Ken Griffin, hedge fund titan of Citadel, has been a major philanthropist and has donated more than $35 million to this project. It's part of his bigger education philanthropy, something we'll talk about. He's here with me. We're also going to talk about Citadel. Citadel has now become the top earning hedge fund of all time, surpassing Bridgewater after a record year last year for a lot of the strategies and the funds there. So we'll talk to him about the markets, the economy, what he expects from the Fed guys. There's no shortage of topics with that hotter PPI number that we got today, and of course the ARM IPO that is happening this hour. So in just a few minutes, you'll hear from Ken with me here at Success Academy.
Looking forward to that, Sarah, very much, of course. Something else we're also keeping a close eye on is the initial public offering of ARM. It's being sold, that is 10% roughly of the company, being sold by its owner, SoftBank. $51 a share, 95.5 million shares. The proceeds going to SoftBank. And I did have an opportunity to sit down with CEO Renee Haas of ARM and founder and CEO of SoftBank, Masa-san. It wasn't very long ago that SoftBank actually bought back some of ARM and paid a higher price. Masa explains.
SoftBank owned 75% of ARM until just a few weeks ago. And just a few weeks ago, we bought back from 75% to 100% from Vision Fund. We paid even higher price. So I'm more confident. I'm more confident about the future. I think the value is going to have a good upside, really long term, and that's why I bought back with a higher price than the $51. And I just want to have all the investors have a good time going forward.
Good time.
He wants them to have a good time.
We're having a
we're
good
gonna have
time.
a lot more from that interview later.
You're gonna catch these
in this hour
daddles.
as well.
Gonna get a little half-ratted.
Masa involving his view of the 90%. But that 51, about $54.5 billion overall value, Masa referred to having bought back from the Vision Fund at a $64 billion value. So he is in it for the long term, and the expectation in his mind is that at this price, it is going to set up for what is going to be growth in the stock price from here, Carl. But of course, we've got to wait and see how that stock opens.
Yeah, and while we wait, let's check in with Leslie Picker and our Bob Pisani, talk about the IPO and others to come, perhaps. Bob, we haven't gotten your thoughts so far this morning.
Well, the important thing is this is really important. It's the biggest tech IPO in a couple of years. So the tech enthusiasts are out there. The IPO enthusiasts are chomping at the bit. This needs to be successful.
Chomping at the bit.
The problem I see is that there's a big natural buyer out there that may have some problems. That's the ETF community. They have very strict rules for inclusion in their indexes. And there's a couple things that I see that's a little bit of a problem. Number one, the biggest index provider is S&P. They do the S&P 500. They require a company to be domiciled in the United States, generally. And of course, ARM is not. It's a British company. That's a problem for inclusion in any of the S&P indexes. The second
We're
is
just
the
waiting
free
for
float.
Griffin.
Most of these ETFs require free floats of at least 10%. And as we've been talking about, right now it's 9.3 to 9.5, depends on how you do it. And that may be a problem for inclusion in a lot of these big ETFs. For example, the semiconductor ETF, SMH, the biggest one out there, that requires a 10% float. You can't really do that right now. One way around this is to just get the green shoe exercise. That's the 15% over allotment. Maybe you can get the 10% on that. One other one that could do it is the triple Q. This is the NASDAQ 100.
Just
There
posted
is no
one of the
market
zero
capitalization,
DTE trades
or
to
minimal number
locals.
here for that one, and that one may well go into the S&P.
Just
or
got
rather
the
into
signal and
NASDAQ
wrote it all
100
out.
sometime
It's up on
this year.
locals
It's
right now.
reconstituted in December. That's a good possibility for inclusion.
Leslie, potential offsets to that?
Yeah, well, not necessarily offsets, but I was just thinking about the fact that SoftBank has about a 180-day lockup before they continue to sell down more of their stake. And in talking with some investors, that is actually something they're looking at, is what happens to this stock as SoftBank for probably years continues to sell and sell and sell. Obviously, that adds more supply. You know, and obviously, if the IPO goes well and they continue
Just
to
posted the
perform
second one.
after that, that could bode well.
So
but
two
the
more
risk
zero
there, of course,
DTEs,
is that
2
as
on
we
Monday, 2
introduce
on
more
Tuesday,
supply
2 on
into the
Wednesday.
market,
Thus far on the
and
week,
there
we are
is
6
this
for
common
6.
trade of that hedge fund
Let's see
managers
if
do,
these
where
signals
they'll
prove to
short
be
these
accurate
lockup
as well.
periods, because
Should I
of that
take these
additional supply
myself
coming into
today?
the market,
I can take
that could
one
put
of them.
pressure on the stock and could just be that outstanding
take one of
concern
them.
each time they do pare back their holdings in this company now that it's about to be public.
You know, Leslie, I did ask Masa that question, of course, and we will have the answer for our viewers a little later. I don't think we have it set to go right at this moment. But I will say, basically, he did indicate his expectation of holding on to it almost in its entirety. Again, we'll see. We'll see. But to your point, it didn't sound to me, and I'll let our viewers judge for themselves and parse his language, that he has any intention of selling even after the lockup expires.
Yeah, and he's in a unique position to do that, especially now that it's owned by SoftBank as opposed to the Vision Fund, because as a typical private equity-backed IPO, you have a mandate from your LPs if you're a private equity firm where you need to return that capital to shareholders, you need to get that exit and liquidity. IPO is the first step, but then over time, you do have to kind of fully sell down that company into the public
I did the one on the
markets.
Qs
But SoftBank
myself.
obviously is in a different category there. So his decision to do that, I think, is noteworthy and important for investors today.
This low float is a problem for a lot of the retail investors because it keeps the volatility high, and that's an issue down the road. Remember, we want this to be a success. Retail investors,
at Matt Kohrs, what up, dude?
IPOs start trading down in the days after the IPO. The big pops are always on the first day. This has got to be a success.
All right,
it's a
where's
big
Griffin?
leader for the IPO market.
We're
this
here
year.
for the interview.
Low float means much higher volatility, and so we got to wait a few weeks to see if this thing actually stabilizes.
We'll check in with you guys all morning long. Leslie Picker, Bob Pisani. Let's get back to our Sarah Eisen with Citadel's Ken Griffin. Sarah.
Hi, thank you, Carl. And I am here with Ken Griffin, founder of Citadel. It's good to see
Here
you
we
here
go,
at
here we
Success
go.
Academy, which I know you want to talk about. Thank you for joining us.
It's great to be here today.
We're going to talk about education and why success in a moment. But first, big markets day for us, big IPO day. The folks were just talking about ARM. Do you look at ARM, which is the biggest debut in a couple of years, as a sentiment barometer? How do you look at IPOs and what they signal about where we are in the market?
I mean, so clearly the ARM transaction is a sentiment barometer. The very fact the deal's coming to market today tells you there's a perception that our capital markets are reopening for IPOs. And I really hope this is a deal that goes off very well today. We need to see all of the VC-backed companies of the last decade have that opportunity to go to our public markets to raise capital so that the founders have an opportunity to continue to grow their businesses and grow our economy.
It's been a surprisingly good year for the markets and the economy, which I think is reflected in the fact that they're going public. Question, Ken, is what comes next?
So actually, I would agree with you. It's been a really good year for the market, particularly with the backdrop of higher real interest rates. So if you look at both the yield on the 10-year bond and, more importantly, the real yield, for example, in the 5-year TIPS bonds, we've seen, again, an increase in real rates and nominal rates, and yet the stock market's been resilient. So that's a really interesting year to see the resiliency of our stock market against this backdrop that would usually be very challenging for equities.
Think it can continue?
I'm a bit anxious that this rally can continue. You know, obviously, one of the big drivers of the rally has been the just frenzy over generative AI, which has powered many of the big tech stocks. I like to believe that this rally has legs. I'm a bit anxious. We're sort of in the 7th or 8th inning of this rally.
Well, part of it has been the soft landing story. Are you a buyer of that? The fact that we just haven't gone into recession despite 525 basis points of tightening.
So it takes about a year to 2 years for an interest rate hike to work its way through the economy. It's not instantaneous. We're now at the point where we're going to see the impact of these hikes really start to play out. We're seeing the job market starting to weaken. There's been a number of news stories in recent weeks about how companies are willing to pull back what they're paying for starting roles. We're seeing signs that consumers have had enough in terms of price increases, that they're starting to walk away from products they're trying to push through price increases. So there's signs here that we're heading very quickly into hopefully the soft landing, potentially a more difficult scenario moving into mid to late last year in terms of an actual recession.
Sounds like that's what you're expecting, a recession.
Look, my personal view is that the United States economy is enjoying a tremendous amount of unanticipated stimulus from Washington still. The federal deficit this year is going to total almost 6% of GDP. It is completely unsustainable, but it has been yet another shot of adrenaline into the economy that our fiscal largesse continues to push the economy forward, but leaving an ever bigger bill for future generations.
It also complicates the Fed's job a little bit. We're still getting these numbers. Inflation has come down a lot, but looks to be sticky.
Well, I mean, he's in a no-win situation.
Powell.
Powell is, right? Because monetary tightening can only do so much to offset fiscal stimulus. And in some sense, it's like he's showing up at a fight with both of his hands tied behind his back because D.C. is just on a different agenda than he is. He's trying to prudently slow the economy, bring inflation back down, and really engineer the hopeful soft landing. And at the same time, whether it's the Inflation Reduction Act or other programs that have increased spending, we keep stimulating the economy out of D.C.
But do you think those pieces of legislation are a mistake? Inflation Reduction Act, CHIPS Act, aren't those helpful for our future?
So there are absolutely elements of this legislation that are important. So, for example, if we can successfully bring chip manufacturing back to the United States, that helps us maintain national security, both from a matter of national defense and economically, against shifting geopolitical tides. So that's a really important piece of legislation. But if you look at the amount of spending that goes towards that part of the overall legislative agenda, it's like a drop in the bucket. There's been a tremendous amount of spending on a whole slew of different things that don't have the same element of both being in an interest of national security, economically, and defense.
So you're worried about all the fiscal spending. Do you think that the market is starting to worry about that?
Absolutely. And let's just take a step back. At the start of the year, people thought that the deficit was going to be roughly 3% of GDP. And of note, all right, it's double that. It's 6. It's almost 6, where we have full employment in this country. Things don't get much better, and we still can't keep our fiscal house in order. And now that the CBOE has put out their projections that for the next several years, we're going to run deficits of roughly 5%, the fixed income markets are getting nervous. It's an unsustainable path.
You think there's going to be an issue with demand for all the issuance?
Well, one of the questions is
has he actually not
real
blinked? Are
yields
you
that
guys
we've
keeping
seen
track
over
of
the
this?
last
I
few
see your
months
comments.
really attributable to the Fed tightening, or
fiscal?
Is it fiscal? Is it the market's fearful about the magnitude of supply? And to be clear, the possibility of credit risk. You know, we had the U.S. government downgraded by Fitch a few months ago.
Robots don't blink.
If it wakes up our politicians in Washington, absolutely the right call.
I'm not sure it's doing that.
Well, it starts somewhere, right? At some point, we're talking about it today, right? In fact, you're curious about this. This is the start of how we actually make policy happen in America, is we start to talk about the issues. And this issue is now coming back front and center. We haven't talked about deficits in America in a very long time. But now with jet to GDP about 120%, near historic highs, with deficit spending that we haven't seen before in recent history outside the pandemic, this topic is becoming front and center again in the minds of Wall Street.
So do you think we're looking at sort of persistently higher level of yields because of this?
So there's no doubt that this will cause us to have higher real yields, all else being equal, for years to come. There's no doubt about it. What does that mean? That means fewer construction projects. That means less investment in companies. That means that consumers will be more hesitant to buy goods and services. Higher real yields crowd out needed investment that we have in our economy.
What does it mean for the overall investing landscape for the equity market?
So for the equity market, it's a headwind. And that's why we spoke about earlier.
Why you're anxious.
Right. Are we in the 7th or 8th inning? Because we now have this headwind of higher real yields starting to come through the economy.
Even if the Federal Reserve stops raising rates and even starts to cut into next year?
So I think that, you know, there's a small chance of one more increase later this year. They're going to look at data like today. They're going to think about this very long and hard. Do we have to raise one more time? But let's say we're pretty close to the end of this rate cycle. How fast they can cut rates comes down to how fast inflation breaks. Now, the good news is base effects mean that inflation probably comes down over the months ahead. The negative to this story, again, we're seeing higher prices at the gasoline pump. And unfortunately, gasoline is one of those things that you buy every week for most American families. And when you see higher gasoline prices, inflation becomes better anchored in your mind, and that's a problem for the economy.
So you don't see it coming down to Fed's target? Too soon?
2%? No, I will be at 2 if we're in a real recession.
Which it sounds like you don't expect in the next year or so.
I'm hoping not, but if we get to 2, that's actually a very bad state of the world right now.
So you think the Fed will have to stay at these levels or even higher into next year?
Look, here's the conundrum. The Fed's publicly said we're aiming for 2. It's probably not worth the cost of getting to 2. The Fed should stay on its talking points. It's the central bank. It wants to inspire confidence that they are protecting the value of our currency and the purchasing power of the American consumer. But at the same time, you don't want to take the economy off a cliff for the difference between an interest rate or inflation rate of 2.75% and 2. It's not worth the cost. So they're going to have to walk that fine line. I think we'll see them talk about a long-term target of 2 more and more as we head into the mid-2s. In other words, they're going to make it clear they're going to get to 2, but they're not going to do it immediately. And they're going to make that trade-off, full employment versus hitting their target.
They don't want to burn it down. So do you have confidence in Powell?
I think Powell's done a pretty damn good job.
Pretty damn good job.
He's had a horrible hand to play, right? We've had the pandemic, supply chain shocks, massive fiscal stimulus, and he's supposed to try to achieve price stability. That's a no-win scenario. It's a no. There was no course of action where he was going to walk out of this looking like they had just absolutely nailed their job. Wasn't going to happen. So history should judge him through the lens of the predicament that he was put in. And I think they're doing a reasonable job in trying to get us to where they need to get to. If I could say one thing to Powell, it's stay on message. We're going to break the back of inflation. Don't talk about how we might ease. Don't talk about how we're data dependent. Just stay focused on message. We're going to bring inflation down.
There is a lot of talk of data dependence. But Ken, you mentioned AI as something that has captivated investors so far this year. I'm wondering how you're thinking about how transformative it's going to be.
So I believe that generative AI, which is what people think about today when they say AI, is going to have a very uneven impact across the economy. In certain areas, for example, call centers, generative AI is going to be transformative. You'll dial a phone number, you'll get a human-sounding voice on the other side that can respond to your questions and handle your matters, all done from a data center.
No people.
No people. We're going to see a lot of relatively rote or repetitive activity fully automated by what generative AI will bring to the table. We're going to see real changes in productivity in certain sectors of the economy. In fact, right now, the strike in Hollywood really revolves around the impact that generative AI has on the number of people that you need to produce a movie. You see it in the same way for software engineers. We already use generative AI in coding at Citadel, and it's probably improved the productivity of our software engineers by 5 to 10%. Now, what's that mean? That means that we need 5 to 10% fewer software engineers. Now, fortunately, we're growing fast enough that we'll take that productivity gain and not have to change headcount, but other firms will reduce the size of their software engineering team. So we're seeing these impacts start to ripple through the economy. Big picture, though, for most of the economy, this is another productivity tool that simply makes us better at our job, much like Microsoft Word and Microsoft Excel did 20-some years ago. There's no doubt we're more efficient because of email. In fact, it's just part of life. And generative AI is going to have the same part of life aspect for most of us in how we do our work day in and day out.
Is it a big investment theme for you?
It's a theme for us, but more importantly for us, we're thinking of how to use this toolkit to make our firm more productive and more successful. There's very few public opportunities to invest in generative AI. In fact, this is one of the challenges that we have today in our public capital markets, is there are fewer companies that are publicly traded today than 20 years ago.
Oh, that's interesting.
There's roughly
I didn't know that.
1,200 unicorns, according to CNBC. Those are companies that would usually have been public companies. They're not today. Some of this has been the backdrop. It's been a harder environment to go public. But some of this is the backdrop that we've made it less attractive to be public.
What do you mean?
Well, the SEC has, over the last 20-some years,
Here we go,
put in
talking about
place an
regulations.
ever-increasing number of burdens and costs on public companies. It's making our public markets less attractive as a home in which companies live and where their shares are owned. And I think this is a tragic mistake that we're making on behalf of American investors, because for the average family, they don't have a chance to invest in the startups or the mid-sized companies that become the Apples of today. I mean, people forget Apple went public at a very modest valuation. People have had their entire retirements defined by being an early investor in Apple or Amazon or Microsoft. By making our public markets less attractive for issuance, we're taking those stories away from the American investor.
I know you have strong views, especially on Chair Gensler's regulatory agenda.
Here we go.
He actually was in front of Senate Banking yesterday to talk about it. 22 rule changes that he's passed, and more than double that in terms of proposal changes. What's your take?
Too busy.
Too many rules.
Too busy. Too many rules. Too much change. Too much haste. So Chairman Gensler may be coming from a good place on many of these rules.
Oh,
but if you
Kenny.
don't do the homework about what are the real problems and how do you effectively solve those problems, you can end up creating an onslaught of legislation that actually destroys value for the American public, for American corporations, and American investors. And I think, unfortunately, we're well over that tipping point. The SEC needs to slow down
Yeah,
its
because
haste.
Ken Griffin
Take a
is
step
literally
back
the
and say,
symbol of
what
fighting
are
for the
real
little guy,
problems that
right?
we want to address in our capital markets. And taking a huge step back, the United States has both the most vibrant capital market in the world. Think very carefully before you change the rules in the great success story of the world.
Which ones? Are you talking climate disclosure rules?
Well, take climate disclosure.
AI?
For a public company, how are they ever supposed to compile this information? Now, if you compile the information, it turns out you don't have it right, which will often be the case with a new rule. How many billions of dollars are they going to spend defending themselves from plaintiffs' lawyers who are going to have a field day on the back of this issue? I mean, Chairman Gensler, I appreciate you have an interest in climate, but advocate for a carbon tax. Advocate for something that's easy, simple, straightforward, and effective to implement. Don't go burden public companies with a task that's beyond their reach, beyond their core competency, and will just create a field day for plaintiffs' lawyers. I don't
Have you talked to him about this?
I haven't talked to him about climate change on that issue, but we've been very actively involved in the regulatory process. We comment on virtually all the rules that impact our capital markets.
Because it impacts Citadel's bottom line, so he has a room of lawyers arguing for what's better for his business.
We have a very unique vantage point of appreciating how liquidity is created. And liquidity is so important because one of the drivers of our public companies, of our capital markets, is capital formation, right? That's how we create these incredible stories like NVIDIA. They can raise capital in our public markets. And they create exits for venture capital-backed firms, which encourages more VC in America. So we have a really powerful vantage point to comment on these rules.
And they do allow public comment. I mean, he would say they take that all into account.
Well, that's what they say. And unfortunately, we haven't seen that.
Even Ken Griffin is admitting
Does that mean you're an
that
NVIDIA fan?
Gensler doesn't listen to anyone.
So I have huge admiration for what they've done to NVIDIA. I mean, what an unbelievable story. The stock is pretty frothy right now. We'll see if they're able to maintain their dominance within this sector of the market. But boy, have they executed. That's an A-plus management team.
Ken, please stay with us if you would, because we want to talk to you more. We want to talk about why we're here today at Success Academy with the woman who is in charge and the founder of this place. So we're going to take a quick break and come back with Ken Griffin, talk about some of his philanthropic efforts, including at this place, Success Academy. But Carl, in the meantime, I'll send it back to you on ARM Watch.
Okay, Sarah. Speaking of raising capital, we are awaiting ARM's open, returning to the public markets.
Awkward
on the
interlude.
NASDAQ. Indicated around 60 would be about a 17,
Hold tight,
18%
hold tight.
bounce
Market
from
check.
the 51 price. And as Sarah says, a lot more with Citadel's Ken Griffin.
Lower highs, lower lows. We did break this opening low on both the SPY and the Qs. Things are not looking the best as of now. AMC's bleeding from opened and got a high of 910, currently at 850, but still green on the day. I want to be clear about that, currently up 3.4%. Overall, let's check the heat map. Let's see what's moving. Let's see what's not moving. Relative to yesterday's close, things are pretty green. The thing that's really getting hit is Visa. Amazon's a little bit in the red, but overall, relative to yesterday's close, even though we're trending from market open down to this point in the day, and obviously there's a lot of time left in the game, we're on a relative basis from the close till now, things are technically in the green, maybe not trending it in the way that we want. I'm kind of on the lookout for a V-shaped recovery just because we saw that yesterday. So I'm curious. I mean, did we get exactly the gap? No, a cent away. So the gap fill that I called out to everyone before the market opened was 447.71. We got as low as 447.72. My apologies. I know you guys, you only listen to me for perfection. You only come to me because you want exact answers with 100% accuracy. We're not stopping there. I'm not counting that as a win. No way. No way. You guys don't come to me for like, oh, off by a cent. What am I, just a random person who says random things about the market? No. You guys come to me exactly for perfection. So to make that a reality, I will assist the market. Obviously, there's manipulative forces at play, so we're going to have to counteract those with a little bit of our own emoji style to get it to exactly where it needs to be. 447.71, not 447.72. You guys deserve more, and I'm going to give you guys more. So we have that right there on the SPY just to ensure that, in fact, we can hit our target today. If you're using TradingView, if you want to assist me in this effort, and I get it, I know this is the Matt Kohrs show, and you might be thinking to yourself, well, no, Matt, carry the ships yourself, carry the logs yourself. And you're right. But if you choose to assist, I would ask you to also throw the appropriate emojis on your chart, but only do this if you're properly trained in emoji-based trading. Don't be doing this particular willy-nilly, because you could put the wrong emoji on the chart and it can mess everything up. So please be careful there. Please be careful.
Welcome back to Squawk on the Street. Let's bring back in Citadel founder and CEO Ken Griffin, as well as Eva Moskowitz, who is our host today. She is the founder and CEO of Charter School Network Success Academy, also the author of the upcoming book, A+ Parenting, which I definitely need to read. Eva, first of all, thank you for having us here today. I know Ken is a big believer and a big fan of your work and what you've built here. So for those that aren't familiar with Success Academy, tell us about what it is.
Sure. We opened 5 weeks ago with 21,500 students, kindergarten through 12th grade.
That's really big.
21,000 of our students are Black and brown. 16% are special needs. About 82% live below the poverty line.
Order filled.
And yet
Nice.
we are educating them up to a very, very high standard. In fact, our kids outperform kids in the affluent suburbs on the state tests, on AP exams. We have a 6-year record of 100% of our graduates going to 4-year colleges.
I mean, the track record's amazing. Ken, how did you get involved with Success?
So I've been involved with Robinhood in New York for years, and Robinhood's been a big fan of charter schools in New York City and of Success in particular. And then Dan Loeb, who runs Third Point, is certainly part of the Eva fan club, and he made a real point to making sure that I came to learn more about just literally the miracle that happens here at Success Academies.
What are the takeaways more broadly, Eva, about what you're doing here and how to scale that and broaden that?
How
across
did he
America,
interject
where, I mean,
Robinhood?
you've seen some of these these new statistics, it's not good, and especially post-COVID. 8th grade reading is at a 2-decade low. I think math is at a 3-decade low. What do we take from this?
Well, I think we have to take a step back and fundamentally rethink the service of education. We are not getting the basics right in America, even though we spend more money on education than any country around the globe. Take something like reading. For 20 years, we canceled phonics. Any educator worth their salt knows that an evidence-based program is essential. We're not teaching kids to count in kindergarten anymore. That's very, very basic.
Is that true?
The problem
Kids
is
in
really
kindergarten
one
don't
of
count
political
anymore?
will. It's not one
Can
of
anyone
we don't
attest
know
to
how
that?
to educate children. We actually do know how to educate children. We're just not giving them what they are entitled to and deserve. And I think it has major implications for America's global competitiveness. It is a tremendous drag on our system when we have poorly educated kids. And we don't really want a society, I hope not, where we have educational haves and have-nots.
You said it's political will, and I know that you do spend some time, fighting the teachers union, for instance. In some of these bigger cities with changing policies, is that what the biggest obstacle is, do you think, to expanding what you're doing?
Well, I think the unions are one important obstacle. They influence all educational policy, and there isn't really another side. Imagine if the kids had a union, things might be a little different. But kids and families don't really have the level of political influence that the unions have. But I think it would be unfair to sort of say that is the whole problem. We have public policies in this country that make no sense. We have something called categorical funding. I think one of the most important jobs I do as CEO is resource allocation. You can't do that if you're a principal or a superintendent. The state determines all of the categories of funding, and you have no ability to meet the needs of your children in front of you.
So enter Ken Griffin. You've funded Harvard, Miami-Dade, Success Academy. Clearly, education is one of your key priorities. Why?
Well, let's take a huge step back.
Yeah.
You and I will spend our days talking about ARM and Microsoft and NVIDIA. That's not the future of America. The future of America is our children. It's our kids. And if we can't educate the next generation of American students to be successful, our country's over. We talked earlier about the size of the federal deficit. If we can't profoundly change productivity in America, we can't make the promises that we've made to the baby boomers, our retirees, and those who really do have a hardship in life. We need to radically improve education, K through 12, and high school. And we spoke about political will. Let's be clear. We need the voter to make this an issue.
It's not.
It's not, and they're going to pay the price. When you have 53 schools in the state of Illinois and not one student can test at grade level, you don't have a future in a global economy as a nation.
Is that why you left Chicago?
It's part of the reason I left Chicago. We've lost the focus on the basic services of government. Government should educate our children. Government should keep our streets safe. Governments should help to create an environment in which businesses can flourish and in which a civic community can come together to make for better cities, better towns, and better environments. We lost that in Illinois. We lost the big picture. But I'm so pleased to support what Eva does here at Success Academies because she shows us a different way. She takes kids who come from the sob story that unions use in trying to justify their poor results in public schools, and she proves them wrong. Not just a little wrong, enormously wrong. And the kids here, they're remarkable.
And we don't always start out excellent. We use data to figure out how to improve every day, how to improve the teaching and learning. We think a lot about educational productivity. What is the fastest way to get a kid to read? And those are the kinds of practices that are really missing. In fact, the education establishment is kind of anti-data, anti-productivity, anti-efficiency. And those are some of the things that allow us to be
AI? Is AI going to be harmful or hurtful for education?
I think in the long run, it will be helpful
ARM
for the
is
same
live.
reasons, Ken, you mentioned.
Thank you for the
It's
update.
more the back office. I don't know exactly how helpful it will be on learning per se, but there are so many things in education that humans are doing that are unnecessary. And I'm really excited about making our
Market trying to push
operations
a bit.
even more efficient so that we can put more resources in chess and debate and art and music.
Well, it's a great test case.
But I do think, though, I cannot emphasize enough how you hold the children here to extraordinarily high standards, and they rise to the occasion. When you believe in these kids and you believe in their potential, they step up. And I'll share a little story that Dan's going to be upset about. Dan Loeb and I were here a few months ago, and we were in the AP classes, and Dan and I are both big art collectors. And they put up a painting.
Famously.
Yes, and who painted this, and what's sort of the story behind this moment in art history? And Dan and I are looking at each other going,
No idea.
I don't know. And then the second painting, and then the third painting, I'm like, I know that era. I can't tell you who painted it. But I mean, to see these kids with that domain expertise is humbling.
Is
And
it
then you walk
necessary
into
for
the
kids to know
macroeconomics
about
AP
art
course,
history?
and they're going through all the mathematics of macroeconomics that I haven't studied since college. And it's like, they're serious here. These kids are
I'm not
having a
seeing
world-class
ARM.
education here in the heart of New York City.
Sounds like they're future $19,000 a month interns at Citadel.
They certainly might be.
All right, Eva, thank you so much again for having us here and talking us through that. Eva Moskowitz of Success Academy, Ken Griffin. We're going to have a lot more with Ken. We've got an 8 p.m. special on CNBC on Monday evening, and we're going to hear much more from Ken
8
on
p.m.
the political landscape, whether he's still backing Ron DeSantis. I know a lot of people want to know that. Ken, we'll talk a little bit more about the growth of the firm as well, Citadel, which is booming in Miami and also here in New York City. But for now, I'll send it back to you, David.
Sarah, great stuff, and very much look forward to that continued conversation. I should add, by the way, I did see a lot of those young kids in their uniforms with SA on them on the subway weeks ago. I think they must have started way before the public schools. Yeah.
They started, what, a month ago? 5 weeks ago.
Yep.
They're serious here.
I did note them. They're all so cute in their
I
uniforms.
don't think
with
enough
the
of
SA.
you guys.
Sarah,
but
thank you. Sarah Eisen,
Thank
a
you.
lot more to come.
ARM's
from
not
her
trading,
with, Ken
so whoever
Griffin.
told me
And by
that
the way,
ARM's
a lot more to
trading,
come as
why would
well
you do
right
that
here
to me?
from our exclusive, or my exclusive, with the CEO of ARM and the founder of SoftBank. Of course, they rang the opening bell earlier today at the NASDAQ. We talked about the future of AI. We
It's
also
not trading
talked
yet.
about that man, Renee Haas's relationship with his biggest shareholder, Masa-san. Take a listen.
Renee has, a great chemistry with me. We share the vision completely together. We are talking almost every day. We are chatting with WhatsApp and, calling all the time, almost really every day, multiple times, like 3 times, 5 times, sometimes 10 times a day.
You heard it here first. Sometimes 10 times a day. All right. Market popping a little bit right now, but is it enough? Watching 449 on the SPY. Obviously, as discussed this morning, if it can get above and hold above that, I think we have a nice push to the upside. There is an upside. No, actually, we got the upside gap fill. Never mind. The only gap fill is the 1 cent below. Yesterday's high was 447.71. Today's low was 447.72. So there is a gap of 1 cent. I'm still looking for that to be filled today. Will it be? I have no idea. Actively watching the SPY right now to see if it can get above, hold above 449, or is it going to get kind of like triple rejected here and then sent back down to this sub 448 level. So watching that very, very closely. Strong liquidity grab, V-shaped recovery going on in the Qs. Painful to trade. I mean, well, painful if you were short because you're probably frustrated thinking to yourself, why does it keep going up? Why does it keep going up? How is there no breather? But then if you ended up being the person who liquidity grab, bought the long on the reversal with minimal risk, you're loving it. So, I mean, to each his own. I hope you're on the right side of it to see whichever way it is or isn't going today. The SPY continuing to push, continuing, waiting, actively waiting, eagerly waiting to see what in the world is going on with this ARM IPO. Waiting. This magnet's not working for crap this morning. I need to recharge my magnets, and more so, I'm just going to blame it on you folks for not appropriately applying the magnets with me. So yes, 100% blaming it on you. Without a doubt. Where are we on the SPY? The Q's, a strong recovery there. Honestly, a pretty decent bounce in the SPY as well. I'm looking at some of these major levels, EMA and whatnot. I had a little scalp in there, liked it. Don't forget, hey, if you're just joining right now, try out prop trading if you haven't done it yet. I think this is thus far, at least my personal experience with Top Step thus far has been good. Unfortunately, I've been able to pass the test, but we're getting closer, learning stuff every single day. Check it out, Top Step. You could get like 60% off, pinned to the top of chat in the description of the video. It's a good in between paper account trading and then using your own real money. It's basically, if you pass the test, you're using other people's money. And someone did ask this before, where was it? But it is nice to know that the first $10,000 of profit, if you're lucky to make it, it's all yours. And then after that, it becomes a 90-10 split with the Top Step funders, basically. So you keep 90%. Pretty solid.
On the opening price for that IPO of ARM, some 95.5 million shares. As you take a look at the NASDAQ, they're getting close. 95.5 million shares, priced at 51. That's from SoftBank. That money goes to them. But it will create a public company of ARM, a company they bought in 2016 for $32 billion. Almost had it sold to NVIDIA a number of years later for about $40 billion, but the FTC and antitrust regulators in a number of countries got in the way of that.
Especially in the UK.
And now SoftBank,
they're only selling 10% of the company.
Hitting the public markets.
As
We're
in
hearing
SoftBank
58
still
right now is the
major
indication.
controller.
Had been as high as 60, but we'll keep you apprised. It may change. We may be a ways away. It's unclear from unopen. That said, I did have an opportunity to sit down with ARM's CEO, Rene Haas, and, of course, SoftBank's founder and CEO, Masa's son, talking about the company as it stands now and what their hopes are for the future.
Whether it's the data center, obviously around sustainability, you want to have as much low power as possible. Again,
not going to lie,
running off
that's
batteries.
not what I thought Rene
It's a great
looked like.
place for ARM to really grow our business, and that's what we did in the years being private. Between 2016
I had some
and now, we diversified our
preconceptions
business.
of what Rene
We've got
would look like.
Significant growth in the cloud data center and in automotive.
Going to be straight with you all.
Okay. That wasn't what you were supposed to listen to, although it was very interesting. Carl, we're hoping to actually get a much larger chunk of time about the future for chip design for ARM.
Awkward.
Talk to Masa about AI as well. Sometimes things get a little bit mixed up in the control.
Yeah, I mean, managing tape is a skill and art in many ways.
And managing the logistics of this shoot was also, as you might imagine,
I can
as
imagine
well,
with the time difference.
given Masa in San Francisco. Okay, let's take a listen to
It's not that hard. It's 3 hours, dude.
the conversation we had around AI. Of course, a very important part of the focus of the company in terms of what it says will be the growth ahead, whether it is helping NVIDIA in terms of its Hopper chip and other areas. As our viewers may know, Masa has been focused on AI for quite some period of time, and he continues to be a believer. Take a listen.
I'm a big believer of AI. Since I started SoftBank, I was a big believer of, the microprocessors enabling all kinds of technology evolution, starting with PC and then mobile, internet, and then now going into AI. It is front end of all the innovation of our industry.
The market has been ripping from 1020 till now.
So ARM is now going to become the core of the AI revolution. My belief of the front end of the IT industry's evolution is really shifting to AI. So my focus, my belief is all centered in AI, and ARM is going to become a core of that. Many of the Vision Fund portfolio companies, we have about 500 companies, they are going to be, having a lot of great applications of AI, and they're going to be beneficiary of this ARM and many other AI technology players.
Yeah, well, I mean, you recently said, or not that long ago, ARM is positioned to benefit from AI becoming the, quote, the basis for a new society. What does that mean?
Well, I think this is the first time that mankind experienced something smarter than mankind itself, right? Mankind was the smartest animal on the earth. The AI is going to surpass, and surpass big time. I think the AGI stage is coming very soon. And once it comes, it goes so far away. And it's a new stage of society that we all have to ask ourselves, what is mankind? What is job? What is life? What is the intelligence? It's a new experience, completely new society that we are going to face.
Decently
Masa,
holding
if
about
you'd been in that
449
meeting
now.
with a lot of the leaders in AI that just took place,
We could
with
watch some
Senator
of that.
Schumer and other members of Congress, what would you have shared? I mean, you just said it's going to exceed our own intelligence. There are those who are quite frightened by that prospect and worried about the dangers of AI. Do you share that?
Well, if we mishandle it, it has a danger. Like automobile society, it has a danger of the car accident. If you don't regulate, the automobile society is regulated with a traffic light and speed limit, and don't drive with alcohol drinking. So AI society should regulate to protect humankind. However, it has more merits than the demerits. So I think I'm a believer, I'm optimist that AI is going to solve the issues that mankind couldn't solve in the past, like difficult disease.
I don't think this guy's had an emotion in
disasters,
his life.
The car accidents, all kinds of other issues that humankind had in the past will be helped by the advancement of AI and technology.
Renee, you're going to be in the middle of this. I mean, you're going to be providing designs that are going to help NVIDIA create chips that are going to be powering generative AI. Do you feel similarly,
Market,
or are
nice
you
push.
perhaps more concerned?
I agree
Damn.
with Masa from the standpoint that we are going to see some very, very profound advancements around AI going forward. The ChatGPT moment, if you will, I think was a tipping point relative to what the capability of these large language models could do. So on one level, as a CEO of a company that builds a lot of devices based on AI and an engineer at heart, phenomenal opportunity. And I think for us going forward, back to the CPU being the center of everything, and you can't really run AI without a CPU, it's going to be a huge growth opportunity for ARM. That said, there are a lot of social and ethical type of things to consider, which I think as a society we have to figure out. And
My
we're in early
alert's
days
about
on
to
that.
get hit. What a push.
All right. Want to now get back to what we originally planned to show you prior to listening to that conversation about AI. Obviously, you heard Masa very positive on the prospects for AI. Of course, he does believe that artificial general intelligence will soon be here and exceed human intelligence. There are plenty who have perhaps more profound concerns than he would appear to. But here and now, it's about ARM and how it's going to perform now and in the future. Take a listen to Renee Haas talk about
Market's
that.
still going, dude.
Core product
Holy
is the
shit.
CPU. And what is the superpower of the CPU? It's the broad software ecosystem around it. We have a software ecosystem like no other architecture probably ever invented. Every major operating system, whether it's iOS, Android, Windows, Android Linux, automotive Linux, all the Linux distributions for the cloud, not only do they run on ARM, but they've been optimized for years, in some cases decades. RISC-V, as you mentioned, is a new emerging entity. Right now, what we see is that they just don't have much traction in the area around software ecosystems. It's not to say that we don't watch our competition very seriously. We obviously do, and there's a lot of war room discussions about how to address that. But broadly speaking, I think the hurdle they have to cross is around the software ecosystem, and that is not an easy moat to cross.
Why not?
Just the sheer amount of development time that goes into it. I'll give you an example. Windows running on ARM PCs. I worked on them personally in my previous life back 2009. Here it is 2023, 14 years later, and we're just now starting to see growth of ARM on Windows PCs. It just takes time. There's a lot of software work that needs to be done, development time, and optimizations. And that's just for PCs. When you think about phones, when you think about the cloud, when you think about automotive, the software gets more and more complex. So I think over time, that is something that we'll continue to invest in, and I think it's a big path for RISC-V to cross.
Speaking of over time, Masa, you know, again, you at SoftBank own 90% of ARM, the now public company. Are you going to sell any of that? Is it your expectation that you will be a holder from here on of that 90% stake, or is it something that you do see
What are you
as,
doing, Masa?
you know, potentially monetizable
You buying,
over
you
time?
selling?
Well, I want to keep it as much as possible, as long as possible. I'm a long-term believer and so on. Of course, you know, if the next COVID comes, who knows? But our intent is to hold as much as possible, as long as possible. I wanted to keep 100% of ARM. Only reason we are having IPO and selling is because ARM is such an important company for the industry. I wanted to have investors opportunity to participate on the upside opportunity of ARM, and wanted to become a public, it used to be a public company, so back into public companies position, so that, you know, people will have more transparency of the operation of the companies and so on. And also give the engineers and employees the stock options to realize.
Right. Renee, you're now a public company CEO. I mean, you do have one very large shareholder, but does it change how you do your job?
Well, you know, as Masa said, he's a long-term believer in ARM. So making sure I keep my #1 shareholder happy is very important. But at the same time, you know, he and I are very aligned on the long-term vision and view for the company. I believe we are one of the most foundational companies inside our industry. The world runs on ARM.
Market is still going now. It was looking like crap, but 1020, someone flipped the switch,
I think when we
buying
look
like
at
crazy.
the percentage of the population that uses ARM, it's probably north of 70%.
We're
So
still waiting on
while
ARM
we're
to actually
thrilled
start
to be
trading,
public
not
today,
trading
and I'm
yet.
thrilled for all the employees, as I said, and our partners and developers. I really think that the best
Microsoft,
is ahead. And I'm
Tesla,
super excited about the next 5 to 10 years. For the company.
NVIDIA,
Is there any scenario in which you would actually start to not just design
Meta's
chips, but design your
going
own
today.
chips?
I don't want to foreshadow what
Lots
our
of
product
green
plans
now.
might be.
Lots of green.
But the company is foundational to the electronics industry, and we have a lot of opportunity for growth.
That's where you're going to leave it. Just that.
Meta's
a lot
popping.
of opportunity for growth. We're going to be able to do interviews in the future together. So I guess I'll be.
You can ask me next time.
I'll be
Oil.
able to ask you that again. Let me come
Oil's
back to
ripping.
something as well that Renee, that a number of investors did.
Oil
at least
officially
mention to
above
me as a
90.
potential concern, which
Next
is this
target
lawsuit against
is the
Qualcomm.
mid 93s.
You know, never great to be suing
Oil,
somebody that you do
geez.
business with. Can you give us an update in terms of your expectations?
Oxy's going.
And why perhaps
Exxon's going.
Qualcomm's a great partner.
Chevron's going. They're
back
all
to the
going.
foundational aspect of what we do. Just about every product that Qualcomm puts into the market runs on ARM. Their Snapdragon that goes into phone is based on ARM. Their forays into PC will be based on ARM. Their automotive platforms are all based on ARM. So they're a huge partner for us. We hope the dispute can be settled. I can't say much about the litigation. It's headed for the courts next year. But I'll just kind of leave it at that.
Litigation and Qualcomm, Carl.
Look
Imagine
at that
right? Never
pump,
happens.
man.
They tend to get
Huge
involved in a lot of
rip.
that. By the way, you know, he did mention RISC-V, and I just want to make clear that's an open source company that is competing to a certain extent with ARM. I asked that question and got more of an answer on it, but he'd referred to it. I don't think we had all of it in there. So And you've got Meta, Tencent, Alibaba, all at least undertaking some initiatives with Risk 5, which again, from an investor standpoint, presents potential risk, at least in terms of competition and how much you can raise price.
Isn't this the danger of pressing too hard on royalty rates? The idea that they would opt to do something more open source?
Exactly. Yeah. They seem to think they have a value opportunity to increase price. Price becomes an important component of overall growth for the company. But there is that question, if that becomes a more significant initiative, that open source opportunity, would it present a price competitor in some way that might drive some of their customers to it?
Fascinating to listen to Masa and Griffin together talking about the opportunities to cure disease, to lower the number of car accidents, to get faster response time on a 911 call. And I love that line, more merits than demerits, from Masa. That's a good line.
Yeah. Listen, as he's been for a very long time, very positive.
Is this pump going to hold?
Prospects of what AI will mean for society. I can remember our interview from March of 2019.
Man,
where he
perfect
talked similarly
V-shape.
about we'll all be sitting back getting fanned, but again, getting fed grapes. But
SPY maybe
we'll
going for a new intraday high. Just below 450. Key technical level, key psychological
he did
level.
Not take advantage of that viewpoint. The entire interview will be available online. We'll let you know. Squawk on the Street continues right after this.
All right. I'm going to ask for a big favor. Could someone in here who has really bad luck go long on the market? Because I would like it to drop a little bit just so I can get in at a more reasonable value than like buying on this absolute rip right here. I know it's a big favor, but I'll owe you one. And you know what? I'll give you a gold star right now, but someone with particularly bad luck, could you just go buy some calls or something? I need this market to drop a bit. Just did, got you. Thank you. Much appreciate it. Much appreciate that. Thank you. Yeah, just looking for things to come back down to like a little bit more of a mid-range so I can make a better decision rather than buying a rip. Thank you. You guys are the real stars of the show. You're the real stars of the show. Actually, let me set up an alert. All right, I just want an alert just in case we keep ripping from here while I'm just taking a break off the charts. VinFast market gap, 190 billion down to 39. Yeah, just a weird kind of automaker pump. Taylor Swift fans tell Elon Musk to stay away after he sent bizarre tweets about her. Her limbic resonance skill is exceptional. That is probably a nice compliment, but sounds weird. ARM currently indicated to open at 58. Definitely a couple billy higher than their initial expectation, but that's how this stuff goes. I don't think that's like really surprising. What did I see? I wanted to see something from Elon on AI. There's a big meeting of the big wigs. Where is it? Why not RNC research? Where he responds to a lot. Where he commented, dude, this guy has been. Is this it? Elon alert. Is this it? No. I guess this is the AI thing I was thinking about. Elon answered questions from CNBC after leaving the Senate AI Insight Forum a few hours ago in Washington. All right, this is what we're looking at. This is what I'm looking for. So, a little bit of framework to this. Yesterday, there was a lot of tech titans invited to talk with the Senate about AI and rules so they can better legislate around it. And obviously, this is what Elon had to say afterwards.
So I think the key point was really that it's important for us. It's important for us to have a referee, just as you have a referee in a sports game, or all sports games, and that the games are better
sports game
to ensure that
SPY new high day.
The players obey the rules.
Making that run
fairly.
to 450, it seems.
I think it is important for similar reasons to have a regulator, which you can think of as a referee, to ensure that companies take actions that are safe and in the interest of the general public.
Did you tell them that AI is a double-edged sword?
Yes.
And what did you mean by that? Can you explain that?
Yes.
Well, what the metaphor?
Yeah, I mean,
well, if you have a sword with two sides, one side can get you, even though you're trying to get something with the other side.
When you're telling the senators that, though,
that's how it works.
What do you want them to take away?
I think it's more important to make sure your hilt is also you have a hilt, not a sharp thing.
Yeah. Fair enough. What do you think how do you think they took the message that you brought to them?
Well, I think it was very civilized discussion actually among some of the smartest people in the world. So I thought Senator Schumer did a great service to humanity here, along with support of the rest of the Senate. And I think I think something good will come of this. I think this meeting may go down in history as being very important for the future of civilization.
Do you think some legislation is going to come out of this?
Probably. I'm not sure what the time frame of that is, but you know, the legislative process is not a swift one.
Yeah, that's true.
But I think things will go in the right direction generally. Senator Schumer, or Leader Schumer, did ask everyone to raise their hands in the room to see if they were in favor of AI regulation, and I believe almost everyone did.
Yeah.
So that's a good sign.
Well, of course, there should be some level of regulation. Like, you wouldn't want it to go untethered.
Do you think they were changed by anything they heard from the Senate side?
Well, I can't read their mind, but judging by the fact that they put their hands up when asked if they believed that some regulation is in order, I think I think it's clear that there's a strong consensus, overwhelming consensus that there should be some AI regulation, that it would be in the best interest of the people to do so. And I think we'll probably see something happen. I don't know on what time frame or exactly how it will manifest itself.
Yeah, that's the question. Is what were they going to do?
I don't know. I mean, there's clearly, we've created regulatory agencies before, and actually just recently, just before leaving, made the point that, you know, while our regulatory agencies are not perfect, and I deal with regulators on a very frequent basis, with automotive, you know, communications with Starlink, and then FAA with rockets. So I've had a tremendous amount of interaction with regulators for, you know, a couple decades at least. And while regulators are not perfect, there's no regulatory agency that I'm aware of that I think we should, at the federal level at least, that we should delete.
Yeah. Do you think there should be a department of AI or something like that?
Yeah, I don't know what exactly. Perhaps a department of AI. Yeah. It probably, let's say, I think the probability of there being some sort of AI regulatory agency that stands on its own, similar to the FAA or FCC, is likely at some point.
You think so?
I think so. Now,
Makes sense.
The reason that I've been such an advocate for AI safety in advance of sort of anything terrible happening is that I think the consequences of AI going wrong are severe. So we have to be proactive rather than reactive. In the past, if you take, say, and I'm being somewhat late for, speaking of regulators, I'm a little late for the FAA. I'm meeting with the FAA.
We don't want to hold you up.
Administrator, but yeah, if you take the example of say, seatbelts were opposed by the auto industry for a very long time, even though the data was very clear that they're safe, that they radically improve deaths and injuries. So, you know, we don't want to be in that situation where we're fighting regulations, even though, you know, there's a safety thing. We can't wait for millions of people to die in auto accidents. As you know, and it's important to just elevate the question here. The question is really one of civilizational risk. So it's not like one group versus another, one group of humans versus another. It's like, hey, this is something that's potentially risky for all humans everywhere. Very important to understand that.
Is there an equivalent of seatbelts for AI?
Do you think Congress is sufficiently ready to regulate AI?
No, not yet. No, the sequence of events will not be jumping in at the deep end and making rules, but it starts with insight. In fact, this is actually how all of the regulatory bodies have been formed, I believe, is you start with a group formed to create insight, to understand the situation. Then you have proposed rulemaking.
Market, huge buy program, so evidently pumping for like an entire hour right now, just under an hour.
That rulemaking then becomes law or regulation.
What's your message to an ordinary person, a Tesla
very little
driver?
disagreement, actually.
Thank you, Elon. Thank you.
Is AI going to still want to...
Well, that's what's going on in the world of Elon and the Senate and I guess AI. I I mean, we can't just do it completely like that. You can't just be like, oh, we're going to allow anything to happen. A CS trader has made an insane investment for CS2, purchasing 15 M4A4 house for 100,000, hoping they go up in the new game's release. 15 of these for $100,000. What's that? Like 7.5K each, something in that realm. I'm not going to be a person who says I fully understand this market, but some of the numbers and the trade-offs I see specifically in the skins in CS, it's crazy. It's crazy. I've never really stepped into it myself, but I do ask you, like, have any of you guys done it? Like, have you been trading, buying, selling? Does the market continually go up, or is it like really fickle and super volatile? I guess I'm just looking for more information because it does seem like there's some astounding numbers with this CSGO trading market. It's crazy. Crazy, crazy, crazy. Have any of you done it? I used to play CSGO Source. If AI learns something new, will they share it with us? Who knows, man? Doesn't have enough loading. What? Carvana moving. It's on the Traders Brew post and options watch list. Carvana up to the mid 50s now. Interesting. 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 Wait, what? Elon, is that, I guess, not a new kid, an old kid? What else do we have? What else do we have going down? What else do we have going down? I'm not seeing any other breaking news. We're all, oh, what's this? Are they about to go?
Obviously a long time
ARM's about to go?
watcher, D, and you've long said he needs a win here.
He does, and sort of there's always been this question hanging around Masa for at least the last 10 years. Is he a really great investor, or is he just lucky? It goes back to the dot-com boom and
I'd rather
bust of
take
2000,
luck
2001,
than skill
and that 20 million
any
bet he
day
made
in this
on
game.
a little-known Chinese e-commerce company, Alibaba, that turned at its high point into more than $100 billion. It's seen as one of the greatest investments of all time, and that has sort of created this legend and stature around Masa-san that enabled him to, you know, come back into the venture capital markets with a vengeance,
to
with the Vision Fund 1
11:06,
and the Vision
almost
Fund
a full
2, but
hour,
he
just a
hasn't
huge
been
buy
as
program,
lucky since then, since
nonstop,
about 2006.
higher
He's
highs,
had
higher
some
lows on literally every
losses
single
like
bar.
WeWork,
I don't
like
think there was a
Oyo
single
in
bar that we
India.
broke
So
the
he
previous
needs
one's
this,
low.
and, you know, I was listening to your
The low was
discussion.
tied,
Is
higher
this
low,
going
higher
to
low,
be
higher
sort
low,
of-
higher
is
low,
ARM
higher
going
low,
to be
higher
able to
low,
play the
higher low,
cruise?
higher
He
low,
knows
higher
what
low,
he's
higher
doing
low,
in
higher low,
artificial
same low, higher low, higher low.
intelligence. But
It
there's
huge
as
buy
many
program.
cases as to show
This
that he
is
hasn't been able to really execute on this
exactly
vision.
what you
Certainly
would
he's been
expect to
talking about
see when there's
artificial
a big
intelligence
player
for many,
like
many
just
years
through a
before
buy
many
program,
others
just
in the
like
market were
loading
talking
up a
about
position.
it. But you know, he made an investment in Nvidia in 2017 and sold it a year later. He made more than $3 billion, but that would have been
Look at
tens
that.
of billion dollars had he
That's-
held on, or had he,
that's crazy.
you know, got through that acquisition,
Holy
Nvidia
shit.
of ARM. So a lot is on the line for him, and he sort of introduced this idea in venture capital markets of spray and pray. He had $100 billion to play with that first Vision Fund, and the idea was invest in as many companies that supports your thesis as possible. And one of them is going to turn out to be this outsized winner.
How has it
like
not
in
had a
Alibaba.
pullback?
That's what he's
This
been
is
doing,
crazy.
and we haven't seen that quite yet. There's also a difference between artificial intelligence and generative AI, right? This whole shift in the Magnificent Seven, the huge upside that we've seen in markets so far this year has been really around generative AI. Is it enough that ARM may be AI adjacent, not AI centric? Some of his other bets as well, like Cruise, right? One of the leading robotaxi companies. He sold out of that. So he does need this.
I wonder, David, how you think he'll be judged.
Are we doing this? Hit the go
given
button.
His duration, right? His management duration, we've joked about it, longer than most.
Yeah, and I mean, he's still got his very long-term plan. He is 66 years old at this point, and he says he's solely focused now on AI. You heard, obviously, his comments in terms of what he believes society will look like. He's very positive on that. You know, listen, I mean, don't forget Sprint, obviously owned that successfully after many attempts, merged it with T-Mobile, benefited from that deal. Remember, they had a SoftBank, of course, also a very important provider of wireless services in their home of Japan as well. But Deirdre's points, I think, are important and salient ones. You know, he's not put up the numbers you would have
AMC not
anticipated,
following for whatever
particularly given
reason.
he seemed to be in the right area, kind of had the right expectation, but didn't seem to execute on it.
Mike, is it like the Yankees, where this season's tough, but you got a lot of rings?
Well, I mean, the Yankees haven't had the final win in like 14 years. So, no, I do think it's similar in the sense. Look, I think that generally having extreme and persistent techno-optimism.
All right, just still waiting on this to actually go live. NVIDIA insider trading alert. NVIDIA CEO Jensen dumped another $27 million worth of NVIDIA shares. He's now sold almost $100 million worth of shares over the last week. When the CEO is pulling the ripcord, that is not the best sign. You never know exactly the reasoning. I want to see if this was a 10b5-1 filing, but we have the CEO of NVIDIA ripping sale. Whoa. No one is holding on to their shares. Look at all of September. Look at everyone's just getting out. Everyone inside NVIDIA is pulling the ripcord. That in no way could make you feel optimistic. That could not make you feel optimistic. Let's see if it was a scheduled plan, 10b5-1. Yeah, 10b5-1. So basically, all that means is that it was scheduled beforehand, like couple weeks, couple months, and then it's to avoid any looks of like insider trading or anything like that. You just do it beforehand. Dude, that's a lot of money. That's a lot of freaking money. He's getting out, pulling the old ripcord. I didn't realize that so much of the company. So obviously all these red ones were the CEO selling, president and CEO, but everyone. Look at this. This is December, January, May, June, August. Directors, CFOs, EVP operations, other directors. Dude, fire sale. They're getting out, I guess, while the price is high. Obviously, this price isn't going to hold forever. Like, it has to come, you would think, at some sort of reasonable reversion. But, geez, interesting. Because ARM, their buyback when it's lower. Could be. Very well could be. I mean, once again, a 10b5-1, it had to be planned decently far in advance. It's not like they decided last night. But the market, what is this rip? We're almost at a full hour. I guess it's going to be interesting to see if this holds or if this is going to get dumped on. Is it just going to run up to 450 and get smacked? Are we going to run to 450 or 378 on the Qs and just get smacked? This is quite the pump. I mean, the RSI has to be blown out. The MACD has to be blown out. Like all those, it just keeps going and going and going. Especially on a hot PPI report, on a hot retail sales report, doesn't make the most sense to me. I mean, we're still just going here. How? What in the world is going on? Am I jealous that I missed it? 100%. I just generally, when you see such a continuation like this, usually it's not sustained this long, but obviously there's always counterexamples to every rule in the market. I'm just a never-ending pump. Blows my mind. Blows my mind. Are we going yet?
Require a leap of faith to buy it at this level. I mean, it's trailing 12-month price to earnings ratio.
Let's
paints
go.
It as an AI play when it's not quite as such yet, although it has plans to be and it's trying to be. It puts it at almost an NVIDIA valuation and certainly well above a Qualcomm or the semiconductor industry as a whole. So that's sort of what the IPO is, though, right? It's a little bit of a leap of faith. You're getting in at the start of trade so that you can embark on the
that
upside.
was wrong. For those wondering about ARM IPO today, ARM will start trading at 10:20 a.m.
Should be asked, are its best growth days behind it?
That's right. Yeah. I mean, obviously, ARM's got
that wasn't
core
right.
of predictability, and then you have a lot of argument about the growth prospects outside of what they already have in hand. Deirdre, Leslie, David, thank you very much. We'll continue to watch as we click toward the open. Still to come, Oakmark's Tony Koniaris on what he says. Why he says healthcare looks attractive for the first time in a while.
Does anyone have any form of an update of when this is actually going?
And a lot more on ARM as we count down to the opening trade at the NASDAQ with the stock indicated to open at 58 right now. Stay with us.
How much long? Give me a time. What's going on here? Why do we not have a time? Why is this not figured out beforehand? Someone just said 63. I heard 58. Someone tweeted out 63. Someone's now saying 61. I mean, it looks like we're all over the place. ARM IPO set for 10:20 we're past. That's an hour ago. That's bullshit. 10:20. That doesn't make sense. Come on. Where are we at? Where are we at? It's probably going to open in the low 60s. About 10 buckaroos higher than what people thought. Or what the IPO people got in at. But I think they have some sort of vesting period. Oh, brother. Oh, brother. Is the market taking finally a bit of a breather? Barely. Barely. This is the first 3-minute bar that we've actually gotten below the previous bar's low. It went from basically 10:18 all the way to 11:12. So almost 2 bars short of a perfect hour of higher lows on every single bar. It's crazy, statistically rare, but obviously it does occur. This IPO will cost an arm and a leg. Slaps knee. I like it. I like it. I invested in AMC. You best believe I'm investing in ARM. I love losing money. ARM about to hit 2K today. Maybe. I mean, that would be crazy. I don't think it's likely, but it might. It might. I think that is absurdly unlikely, but hey, you never know. You never know. All right, what else are we missing? Bitcoin incoming. Is Mr. Beast now Mr. Broke, who was reportedly flying economy on Spirit? I don't think that's Mr. Beast. That's Def. And I don't think it's Spirits. Is that Mr. Beast? I don't think that's Mr. Beast. And what if that's the only flight he could get? Who gives a shit? Tesla net options Delta plus 1.5 million shares. Calls at offer and puts on at bid. Dude, Tesla might get going. AMC stock jumps after company raises $325.5 million from selling shares.
Welcome back. Our next guest fund has nearly doubled the S&P return year to date, but he isn't focused on the Magnificent Seven heading into the fourth quarter. Instead, the fund is leaning further into value names, including energy and healthcare. Joining us now, Oakmark portfolio manager Tony Aris.
Now above 90.
Tony, it's good to see you here.
Next stop, mid-93s.
I guess if, in general, your orientation is to look stock by stock for stuff that hasn't necessarily kept up with the market and looks relatively inexpensive, there's probably plenty to choose from in this market that's been pretty narrowly led. Where is that taking you?
Yeah, well, thanks for having me. You're absolutely right. The market has become incredibly narrow. And so while the S&P looks rather expensive, a little over 20 times earnings, underneath the covers, there's a lot of value to be had. I mean, one of the things we look at is just valuation dispersions in general. And if you take the top decile
boring
Ps
as shit. Why is this not going? Maybe if I set an alert, maybe if I just do. This is March. So the weird thing about the markets, and you've run into this issue if you're ever doing some like data science stuff on it, is sometimes tickers like actually trade previously for a different company. So this ARM, this ticker chart, is actually back from 2011, which was some sort of, I guess, ARM Holdings place at ADS. So maybe it related to the company, maybe not, but this action was literally back in 2011. So sometimes you get like a dirty data set. And I guess if we just add an alert. All right, I have an alert set. As long as the opening price is above 20, it should be going off. It should be letting us know if it's trading or not. Other than that, we're just waiting now. This is kind of boring. I guess I'll give it another 10 minutes just to see. You can send an alert for any price action. Yeah, that's what I did. Just waiting. What about buying ARM at open, join the FOMO crowd, and immediately place a 3 to 5% loss? Might work. I mean, I have no crystal ball. I haven't studied strategies related to that. It very well could work. But I'm not doing it. I'm busy trading the overall market today. I'm not against it. I'm also not necessarily for it. I don't know the data on that type of a trade. I know IPOs are really volatile. If you're quick and scalp and you're on the right side, you could probably make some decent money. But I'm not particularly in tune with the statistics of IPOs going up or open and the time and the percentages. It's just not necessarily my forte. Matt, ARM was previously public, then it went private. Well, I guess that happened back in 2011 then. HYMC is up 7% today. Did someone find gold? It would be up way more than 7% if they found gold, in my opinion. I mean, HYMC is getting absolutely brutalized just because it goes up 7%. What about the fact that it's down horrifically? If they actually found gold that they could do anything with them, this is, if anything, this looks like just a triple bottom, maybe just some buyers stepping in. Yeah, Meta is destroying it today. Look at this. Meta up almost 2%. SPY showing a little toppiness. Q showing a little toppiness, both after a very, very impressive run. Learn from the Ape debut. Well, that was very different. That wasn't an IPO. It was pretty evident that Ape was going down. That's how people, even like myself, who not an expert trader, knew it was going down, because it was just a dilution play. Ape and ARM are wildly different. ARM is a legitimate company making its public debut, I guess, again, while Ape was backdoor dilution. Very, very different. Folks, while we're waiting, don't forget, if you want to try this prop trading account, basically trading with other people's money, check out Top Step. See if you can pass the test to get funded. Pinned to the top of chat in the description of the video. If you click on that link, you'll get a 60% off discount. House Speaker McCarthy, frustrated by headliners, shut down demands, dared conservative dissidents to try to oust him. Do it. This is just China. We also have evidence of Romania, Ukraine, Kazakhstan, and Russia. China to Chairman E. Hudson West, Gong Wen Dong, CEF Infrastructure, Hunter Biden. Hudson West III, Hunter Biden. Just diamonds. We just have a straight up diamond on the chart. State Energy HK Limited, Robinson, Haley Biden. And there's an unknown Biden involved? What in the world? Robinson Walker? I mean, that's kind of crazy. If this all ends up being true, and I know a lot of people are leaning to the fact that it is true, but if it ends up being like 100% proven, that's insane. That really is insane. If you're getting paid off from foreign entities and the money's going to your family or your immediate, like you or your immediate family, that's insane.
I try not to complain too much, but we just went to Taco Bell and got food for 4 of us, and it was $53. This morning, we went to an upscale breakfast restaurant and got breakfast for all 4 of us, including an appetizer, and that was $66. So Taco Bell is almost the same exact price to feed a family of 4 as it is to go to an upscale breakfast restaurant. It's
the same price when you count.
I don't understand.
For
I understand
toilet
inflation's
paper.
crazy, but this has to be greed. Taco Bell, I mean, we got 3 cheesy gordita crunches and they were $14. So they're like $4 or $5 a piece now for a taco at Taco Bell. A beefy 5-layer burrito is $3.89. I don't understand how this can't be inflation. Taco Bell used to be like $1. You could get $1. A beefy 5-layer burrito was like $2.
Trump believes the vaccine saved lives. What? Are you kidding me?
Actually supported mask mandates. So
I don't want to do that. Is this going to ever trade? Talking ARM on Yahoo Finance and insights with chip guru, proud Texan Patrick Moorhead. Just in NVIDIA, CEO sells another chunk of NVIDIA shares. This is his 3rd sell in the last few days. He's now sold $100 million worth of NVIDIA shares in the last few days. Well, that's spicy. Is AMC misleading investors? In the original filing, AMC promised to issue 40 million shares from time to time. The CEO just said that they issued all of them from September 6th to the 13th. From time to time means occasionally, as needed, over a long time horizon, not issuing everything within a few days, yet this is what they did. Well, that just sounds like normal legal jargon. Is ARM ever gonna trade? ARM, where are you? We miss you. Please come back. It's been 12 years since you traded and made us a fat stack. Where are you, ARM? Please trade so I can end this stream. I have a lot of other stuff to do today, including 2 to 3 other videos. Actually, it is definitively at minimum 3. I have a very, very packed schedule, and you're ruining my life by not trading quite yet. Please start trading, and that would be awesome, but you're not, because you're ruining my fucking life. Oh, please, 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 please. ARM, where are you? Where are you, ARM? Or just life, man. The lyrics are amazing. Yeah, it's kind of like a freestyle thing I've been working on. It's just, I like to call that style Matt's life. Just Matt's life. Anything else? Ooh, I guess while we're waiting, we could see if there's anything on TikTok investors. Nope. Same stuff. No good pieces.
Fun. Let's get over to Phil LeBeau live in Detroit for an update on the ongoing UAW battle. Hi, Phil.
Nope. Don't need that. What else do we need? What else do we need?
When you figured out it was a lie. That debt is bad. I plan on being heavily in debt in my entire retirement. Let me show you why. I'm max funding a life insurance policy all the way until I'm 65 years old. Now here comes the best part. I'm going to borrow against all of my money and spend it as extra tax-free income during retirement. The insurance company is projecting that I'll be able to have a 6-figure tax-free income for pretty much the rest of my life. As you can see, I'll be millions of dollars in debt by the time I'm in my 90s. But this is a loan that I never have to repay because it's collateralized by the death benefit on my own policy. So when I pass away, this death benefit pays out and cancels out all the loans against my policy, allowing me to enjoy all this tax-free and still leave tax-free money behind to my family. You see, debt is tax-free.
This guy
and if
seems
you know how
like
to use
a
it,
villain.
it can be a very powerful
Like just
financial
the
tool.
face, the
Follow to
vibe.
learn more.
Follow to learn more.
If you've made it to 20 and you haven't cracked your first $1 million yet, you have to listen to this.
Fair point. For those of you who are not millionaires at the age of 20, let's listen to that one more time because I do think it was an important message here. I'll make it a bit bigger, but give this a listen if you are above the age of 20 and not a multi-millionaire.
If you've made it to 20 and you haven't cracked your first $1 million yet, you have to listen to this.
You can't argue with that. You cannot argue with that. Man, we're really reaching for content today, team. We are, dude, it's 11:30. I tried. They're just, I don't know. I'm about to cut off my own arms because apparently this thing is never going to IPO. Give us the answers. Well, team. Shout out to the sponsor, the affiliate link pinned to the top of chat in the description of the video. Sign up for Top Step if you want to try some prop trading. If you need help with the setup, I could do that. Just send me a DM or something like that. But pinned to the top of chat in the description of the video. I need to go film some videos. We will be posting some content later on today. And then we're going to be streaming once again tomorrow morning, 9 a.m. bright and early. Obviously, with those update videos, since it's like a new effort, it would be greatly appreciated. Not only if you watch it, but comment, like, all that engagement helps get it out to new people. people. It's always a little tough when you're trying out new things. So that'll help me out a little bit. I appreciate it. Thank you, thank you, thank you. I hope you crushed today. Make sure to check out locals, all that good jazz. Just basically look at what's in the description of the video if you are interested in any of that. That's what I have for you. I'll catch you later. Love you all. Peace out.